Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, good morning, everyone. Welcome to Stocks Network Trading. My name is Ron. My partner is Dave. Welcome, guys. It's almost 6 a.m. Eastern on this Tuesday morning, August 26th. So thank you guys all for joining. It is early, but we got to do our analysis, get into these markets, because there is a saying that the early bird gets the worm. So we're going to get in early over here and see what we can do in the markets. We got some news today. We have U.S. durable good orders coming out at 8:30 a.m. Eastern, and then we'll go into Wall Street. Okay, guys. So let's get started by just going over today's news and earnings, and then there's a lot going on around the world right now, and we'll see what's going on, guys. So I hope everyone's having a great day. Hope everyone had a good day yesterday trading. It was always good to start the week off on the right note on Monday. So try not to over leverage early in the week, because that could affect the way how you trade the entire week. So take it easy early in the start of the week and see how you're doing, because we are just coming off the weekend and there could be early news. You saw yesterday's Wall Street market was a little choppy, and then after the call, things can start to move quite nicely. So it's just look for your setups. If they're there, trade with proper risk management. If they're not there, don't force trades, okay? Because you can allow trades to come to you. If you see gold last night during the futures market, if you marked up 50% that zone, I know on Friday we were saying, will it come in here? Will it come in here? It didn't come in there on Friday. And last night it did come right in there. And a lot of our snipers, including myself and Dave, had some buys right in that zone, and they triggered, and really nice. We'll talk all about that when we get to gold, and when we get to our securities. Okay, guys? So first thing is, thanks everyone for joining. Good morning to everybody. And let's get into it just by going over today's news real quick. Trump is always in the news, and but this is pretty big article over here. It's a hot story in the news. Trump removes Fed's cook from position effective immediately. So right over here, here's the article if you want to read it. U.S. President Trump removes Fed's cook from position effective immediately. Trump says he is removing Fed Governor Lisa Cook from her position in a post on social media account. So that's circulating right now. That will affect the markets. First time I've seen a president remove a Federal Reserve chairperson. So this is news, so we gotta see how the markets react to this, okay? Not just that, we do have some U.S. news. So trading through Europe, there wasn't anything going on in Europe. Remember, yesterday were the UK bank holidays. Today they're up and running again. So if you were trading in London, you probably had some volume come in due to the bank holidays that were closed yesterday. And there was no news in Europe today. So now the news that we have this morning is these U.S. folders at 8:30 a.m. Again, notice the timing. 8:20 a.m. is when gold exchange opens up, COMEX. 10 minutes later, we have these U.S. folders. Core durable goods orders month over month, and regular durable good orders month over month. So there is a difference between these. They're both month over month, and they're both durable good orders, but one has the word core in it, okay? So hopefully you guys are getting familiar with this when we have two of these data releases and one has core readings. So if you're unsure of what it is, just click on the detail of the folder, and it will tell you exactly what it's measuring and what it looks for. So core durable goods is a change in the total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items. So the first reading that will come out is month over month. So we'll see the durable good orders from the previous month of July, and core meaning it will exclude all transportation items. Okay, so it will give us a forecast. We have the forecast of 0.2% from the previous. So basically the forecast is no change. We'll see if this increases or decreases when the actual number comes out. And it does affect the US dollar. It's not a high impact folder. It's a medium impact folder. It's an orange folder. It is still significant. We still have to be careful trading at this time when they do release this. Okay. And then the next one is durable goods. So it's basically the same thing, but it's the change in total value of new purchase orders placed with manufacturers for durable goods. And this one will include transportation items. Okay, so that's the difference between these two. Why do traders care? Because like these durable good orders, it's a leading indicator of production. Okay, so rising purchase orders signal that manufacturers will increase activity as they work to fill the orders. Okay, so we'll see, is this going to be a positive number, or will it be a negative number? Will it be better than their forecast and better than their previous month, or will it be worse? Okay, so that's what we have upcoming at 8:30 a.m. We also have FOMC member Barkin speaking. And then we move into 9 a.m. We do have some US folders as well, low impact. Then we get into Wall Street, 9:30 a.m. Eastern. Expect the regular volatility at Wall Street market. And then at 10 a.m., you do have some US consumer confidence report and Richmond manufacturing. Okay. And then later this afternoon, we have Bank of Canada Governor McLean speaking. And then markets close. We move into after hours. Then we move into Australia. We move into New Zealand, we move into Tokyo and the futures later tonight. Okay, so that's the news for today. Not a big heavy day, but still we do have to be careful trading around 8:30 and 9:30 during Wall Street. Okay, earnings wise. Today we have a lot of Canadian banks reporting earnings in the pre-market that have already started. So we got Bank of Montreal, Bank of Nova Scotia. I'll be watching these. I like to look more at TD Bank. I don't bank with Nova Scotia or BMO. I'm with CIBC and TD myself, so I'd like to see what they're doing. Also, what else do we have? We have KE Holdings. Again, I just go through these. Is there any big names that are really going to affect the S&P 500, NASDAQ, or Dow Jones? I don't think so. Not this morning. But I'll be watching to see what goes on with these Canadian bank reports. And then in the after hours today, we have Okta Inc. over here at 4 p.m., MongoDB, Box, Encino over here. Again, there's a lot of companies reporting in the after hours, but again, I don't think that these are going to have a significant impact on the S&P, NASDAQ, or Dow Jones. It's worth noting to look at these always. I have a daily routine. I go through these so I don't miss one of those big names. The big name will be tomorrow in the after hours. That's NVIDIA. That's one we all have to put on our watch list and watch that. That will have a direct impact if you're trading NASDAQ and the S&P, and will also have an impact on the Dow Jones. But that's a pretty big company. It's one of the largest in the world, market cap, $4 trillion. It's a big company, and it will move those indices. Okay, so that's what we have earnings wise today. Not a big crazy day earnings. In the news, okay, so this is big in the news right over here. Trump ousts Fed's cook. There is sufficient cause to remove you. Quote, this is coming from Trump's mouth, okay, not my mouth. President Trump claimed to fire Federal Reserve Governor Lisa Cook on Monday night. So this was last night over allegations of mortgage fraud. Whether this is true or not, I don't know. We don't know the facts on this entire story. But as of now, Trump has removed her. So this came out late last night. So we'll see how the markets react to this when they open up. Will they have an impact? I don't know. But this is pretty significant how he removed our Fed Reserve governor, one of them, okay? And you know how he's targeting Powell too, but Powell is the head chairperson, but he's removed other governors over here. So this is in the news. I was reading about it earlier this morning. I don't know the full details on this, but I'm sure that more will come out as the day goes on. Dow, S&P 500, NASDAQ futures fall as Trump ousts Fed governor. So this was last night in the futures market. Took a little bit of a dip when this news came out. We'll see, has the market already absorbed it, and will it just continue trading, or will this affect the markets when they open up during Wall Street? Okay, so that's in the news. We have to, be prepared and just understand that these things happen, but we got to react to how the volume moves. Okay, Tesla's in the news. Tesla rejected $60 million offer before losing $243 million of an autopilot verdict that they had over here. There is some news coming out of Europe in France. France's government risks new collapse weighing on markets. So right over here, the French Prime Minister is sliding in the polls. You can see it's like in a downtrend. It's very bearish over there in France with President Macron. I don't live in France. I have no idea what's going on down there. We got to ask our French friends to let us know what's going on down there. But he's sliding in the polls and not doing very well. And that's going to weigh on the European markets. Okay. Again, here's another article. Trump versus the Fed. He fired Cook, vows to continue to carry out duties. What else we got going on here? What I was just talking about, European shares fall on French political risks over here. Oil eases after hitting over a 2-week high on Russia's supply risks. What else we got going on here? Just going through the news here. A lot of it has to do with Trump and the Fed and Cook over here, and the French president. Okay, so that's our news over here. Yeah, French people, give us the update if you guys can. Do we have anyone that lives in France? Can give us the lowdown, give us some insider information. That's why it's good to have a trading community. If something is happening around the world we don't live in, maybe someone is living around there and can give us the details, the juicy details. Okay, so that's our news today. Continuing to move over, guys. Our Discord signals, we sent out a signal. You can see it. Yes, it was sent out yesterday at 7:45 p.m. So it was 15 minutes prior to the futures market. We were looking for a buy on gold at around 3,355 or this 50 area. So right over here, here was the big move on Friday. When Powell was speaking, there was a significant move. And again, remember what I said on Friday. We're going to target that point of control. Will it come down that day, or eventually will it come down there? So remember, the game of trading is patience and discipline. Okay, the game of trading is not about being impatient and undisciplined. That strategy will not work. You can try it. You can try it as much as you want, but I guarantee you, you're not going to go far in trading. The way how to go far in trading and to do this daily for years and years to come is to be patient and be disciplined. Let the trade naturally come to you, right? You can have alerts at these zones. You can have signals. You can have pending orders. There's multiple ways how to do this, okay? You do not always have to be right at the computer all day, every day, okay? It's important when a big move happens, whether it's bullish or bearish, it's our job to analyze the move and do our figure out points of control and figure out some zones, okay? So if you figured out a zone on this big move, you see how eventually took all Friday, took the weekend, and Monday, eventually Monday night, right before the futures, it came right in there in this zone from 3,355 to 3,350, and then we can see the results unfold when it came right in there. You see the wick, and then the bullish volume trading out of here and continuing to move You got the beautiful, look at how it just came right into that zone, right into that nice little pocket. Let me just zoom in so you guys can see this, and just traded right out of there. So what is the cause of this? Why did this happen? Because remember what I was saying, there's a lot of traders on Friday that missed the big move, but they placed their pending orders in that gap in the market right there, and waited and waited and waited. Finally, the market came right in there, triggered all of those pending orders, and it looks like they were buy side liquidity. It looks like it was a lot of delta of a buying volume, and you can see the move triggered from like 350 and moved all the way up to 375. So that's a 250 pip move, and you can see that's in about 30 minutes. Right when the futures market opens up. So guys, get in the habit, if you aren't already, in marking your critical zones when you identify. You don't have to be in a trade, but you can be a spectator and watching and place your alerts. Is everyone clear on this? Does this make sense right now? Is it getting better and better? Maybe at first you're confused about this, but now it should be becoming a regular routine, and your eyes should know exactly what you're looking for. And did anyone ever watch this series, Billions, with Axelrod? And it's a series on Showtime. It's about like trading. It's a really good series. If anyone watches it, Sonia, you watch this? Yeah, it's a pretty good series. I was addicted to this series. It's really good, guys. Okay, and then you can see just using a small size, 0.1 is considered a small size, from 55 all the way up to 80. You can see how it can turn into $240 US and can turn into a payday, right? This is like someone's payday, just by using small sizing. You don't have to go huge sizing. You can let trades come to you, and how much drawdown was encountered in that trade? Basically nothing. Okay, it's just targeting those high impact zones and where the pending buyers or those pending sellers are. Okay, so we'll see how everything reacts today coming out of that zone. And when we get to the charts, we'll take a look at that. Okay, guys, we have a free Telegram channel pinned at the top of YouTube for everyone. Thank you, everyone on YouTube, for joining. Good morning, guys. There's 130 viewers. If you guys can hit the like button, subscribe to the channel. Also, join this free Telegram group. It's pinned at the top of the channel. So this is where we show exactly what we do here at SST. There was that what I just showed you there, the buy trade idea on gold, and the results of it, and to show you guys how we operate here at SST. We did a blog last night on the importance of staying emotionally detached in trading. I was talking about this on yesterday's call, saying how I don't get emotionally attached to securities, companies. To me, it's just business. I buy and sell, get in and out, make my money. I don't fall in love with companies I don't fall in love with trades, because if you get emotionally detached with these, it's hard to let them go when you're losing. It's hard to take profit when you're in the money. So to me, it's business. I get into a trade, whether I'm buying or selling, and I go to trade my targets, and that's it. I used to get emotionally attached to my trades, and I found out that was like holding me down. So I learned over time that this was one of my big mistakes in trading. So I did a blog on it, and we can read it also on today's call and go over this, because emotions play a big part in trading. A lot of traders don't talk about this. They just talk about a bullish and bearish candlestick and to buy or sell here. But there's more to trading than just trading candlesticks. You have to deal with the psychology of the markets. You have to deal with your own emotions, how you react to your winning trades, how you react to your losing trades, how you react on rough days in the markets, how you react on good days in the markets, how you react on your investments, how you react on your day trades, how you react on everything. So some traders get really emotionally attached to their trades. Some treat it as a business and just move forward. So we'll talk all about that. That blog is available on our website for everybody. Here's our links to all of our live sessions. Here's today's durable goods. So if you subscribe to this Telegram channel, you'll be in the know of what's going on here at SST. Here's Big Papa Powell on Friday when he pumped the markets, and everything we do at SST. Okay, so thank you guys. If you guys can join this, it's a free Telegram. The reason why I bring this up every day is because there's a lot of impersonation. There's a lot of scamming groups going on, impersonating Dave and I, and saying that they're Stock Sniper Trading, and they have our exact Telegram group. But when you go over here, then they're going to ask you for crypto or this or that. They're going to say, give us a couple $1,000 and we'll return you $10,000 in a week. It's all a scam. It's lying, guys. We don't do that here. So that's why I want you guys. This one is pinned at the top of the YouTube. It's actually us. This is not a scam group, okay? So be careful. And Dave and I would never, ever message you guys and ask you guys for money or say that if you give us $2,000, we'll return you $10,000 in a week. No one will do that. You got to consider it to be a scam. Okay, and this is our website, guys, stocksnipertrading.com. Please give us a visit over here. You can see we have a lot of education, a lot of live sessions throughout the week. If you need one-on-ones with either myself or Dave, we can help you out if you really need it. We can help you with whatever trading you need. And also, here's where the free blog is available. If you go to more, here are all the blogs. We did one on dividends, some weekly outlooks on the trade idea on the Ethereum sell, the Jackson Hole. But this one, guys, real quick, we started early today, so that's why we want to get you guys in a good daily routine. We're not in a rush this morning. We're going for 4.5 hours. So we have a lot of time to do some good analysis. But I also want to read this blog to everybody. I know someone will say, well, why is this guy reading this blog? Let's get right into the charts. We'll get into the charts every single day together. You guys know what we do here. But we're also big on education at SST. That's what is the difference between us and other trading groups, is we really take this serious over here. So this means a lot to me. This is what helped me make me the trader who I am today from what I was when I was losing a lot of money, when I was struggling as a trader. And then finally, when I started to learn this is what changed me. So I hope this hits someone, in the right way. And maybe you guys will understand why I'm reading this blog to everybody. But let's just go over the importance of staying emotionally detached in trading, investing, in whatever it is. When you're in the financial markets, it's important to be emotionally detached. Okay, let me clarify what I mean by this, and let me just read this a little bit more. Okay, so in the world of trading, whether you're trading in the stock market, in forex, in futures, in cryptocurrencies, in options, whatever it is, if you're making a trade, maintaining an emotional detachment from your trades and associated companies or corporations is crucial for success. Why? Emotional attachment can cloud judgment, okay? So sometimes when emotions take over, we're not thinking straight, right? And it leads to poor decision making and ultimately result in financial losses. Here we explore the reasons why traders should avoid emotional attachments and provide actionable tips to help maintain objectivity. Okay, so why emotional detachment matters. Number one, objective decision making. Successful trading relies on making decisions based on data, analysis, and a clear strategy rather than emotions. Okay, so right here, this first objective. Us analyzing data, analysis, and a clear strategy is better than just trading on emotions. When you think a company is going to go up or whatever, okay? Companies don't care about our emotions. So we got to continue to stay analytical. We got to look at data and analyze this data. Emotional attachment can cause traders to hold onto longer positions for too long or exit winning trades prematurely. So emotions can take over. Risk management. Emotions can interfere with setting and adhering to stop-loss orders and other risk management strategies. Traders who are emotionally attached may overlook risks or rationalize poor decisions. So how many times have we been in trades and emotions have taken over stop-losses? For example, you might have a stop-loss already placed, but then your emotions take over and you keep lowering your stop loss because your emotions are telling you it's going to come back up, and then it keeps going down, and don't worry, it's going to come back up. It's a good company. It's a good trade. I just got in a little too early. And then you keep making up excuses in the trade, and you're not sticking to a plan, and you go further and further and further and draw down, and you end up losing a lot more than you expected. Why? Because you're trading on emotions. You're not trading to a sound plan. Okay, so it's very important for risk management. If you can control your emotions, you can control your risk management. Adaptability. Markets are dynamic and ever changing. Emotional attachment can hinder a trader's ability to adapt to new information or changing market conditions, as it may create a bias towards certain assets. For example, like today in the markets, if you have a security you're trading and you're emotionally attached to it, and you're bullish on it, and then it starts moving in a bearish direction and breaking support levels, maybe it's very difficult for you to switch your sentiment and turn bearish on that, because you have like a love for that security. You know what I mean? Your emotions are always telling you it's going to be bullish. It's always going to go up. And then all of a sudden when the market takes a downturn and starts moving bearish, you can't adapt to it, or you can't change, or you can't shift focus or close out your long trade and start to understand that sellers are taking over. And your emotions can cloud your judgment and get you into more trouble. So, you might fall in love with a trade. You might fall in love with a security. Well, I have a saying, don't marry a trade, okay? Treat it as if you're just dating it, and have a date with it and get rid of it and move on. Don't get married to trades, because then you're going to have a hard time taking profit, because you're going to want it to go higher and higher and higher. And then when it starts to retrace back on you, put you in drawdown, you have a difficult time of just getting rid of it in drawdown, because you have a love for that security. I had a problem with this back in the day. I used to hold trades in drawdown for multiple weeks and months, and just hoping and praying that they would come back up, because I was emotionally attached to these securities. I no longer do that anymore, okay? So this was one of my struggles as a trader when I started trading, because I always believed that these securities would always be bullish. And then when there was a time in the markets where it was very bearish, I was stuck in drawdown holding the security for multiple months, and kept adding positions on it and going further and further and further in drawdown, where it almost took out my entire account, where I could have simply, if I was trading more on analytics and data, when I saw that it broke a support level, I could have closed out the trade, took a minimal loss, and then reorganized myself, reanalyzed the market. Maybe I could have hit the sell button. Instead, I really put myself in a horrible position, and it took me months and months and months to recover, not just to recover the account, but for that security to even recover. So what happens if it didn't recover? Could have been another blown account for me. So guys, we have to learn at some point. You got to know what type of trader you are, and not to get emotionally attached. Even if you're a scalper, intraday trader, a swing trader, an investor, anytime. You don't want to get emotionally attached to these things, okay? It's a stress. Also, number 4, stress reduction. Trading is inherently stressful. Trading is very stressful, okay? And becoming emotionally invested can amplify anxiety and stress levels, leading to burnout and reduced performance over time, okay? So you want to trade with a sound plan. This is like a market cycle psychology. You have optimism, you get into a trade and you're making a little bit of profit, the excitement, the thrill, the euphoria, the bull market, it starts to end and you're all the way up here. You can see that the market is now made a top and now it's starting to come down, but you still have this euphoric feeling that things are going to continue to go up to the moon. And then if the markets start coming down, then you go through denial, you go through fear. Then you can see the bullish move has reversed into bearish move, and you still have that optimism right here. You could have been basically at a break even. Now you still have that love for that security, and then now it starts going drawdown. Now you start panicking. Now we have a word called capitulation here, where it takes out your entire stop loss and you're over leveraged, and you can possibly blow up an account or lose your previous day's gains or your weekly gains and put you in this cycle. This is the vicious cycle of trading that we need to learn how to get out of this cycle. And then when it comes down here, you're angry, you're mad, you're upset. What do we do when we're angry and we're mad? We revenge trade. We add more positions. This is the vicious cycle that destroys you and I as retail traders. Then there's the disbelief, then the hope, then again to optimism. But by this time all this happens, you've probably blown up your account, or you've done a lot of damage to your trading. So there's a proper way of trading. Hopefully we can all learn it on if you stick with SST, we can learn the proper way of trading. If this is you and you're still affected by this, we have some work to do, okay? Because that's the market cycle psychology. When we always talk about the psychology of the markets, here it is. Here's your market cycle psychology. This is the ups and downs of trading, so we got to learn how to learn what to do in these situations, okay? And then just some quick tips to avoid emotional attachment. Develop a solid trading plan. Hopefully you guys are working on a good solid trading plan. Before entering any trade, have a clear plan that includes your entry and your exit points prior to taking the trade. Your stop loss levels are already calculated out, and profit taking strategies. Adhering to a well thought out plan helps minimize emotional decision making. So with a plan every single day, we're going to do good in the markets. If we trade these markets every day without a plan, then we're basically guessing every day, and it's going to be very inconsistent. So have a good solid trading plan prior to even taking the trade. When you look to take the trade, make sure you have a proper stop loss and take profit set, and you're already calculated the move, so you know how much you can make a profit, and you also know how much you're willing to lose. And also, when it hits your stop loss, always use proper risk management. Don't trade your entire account on one trade. Don't be reckless, okay? Set clear goals. Define what you aim to achieve with your trading, whether it's short-term gains or long-term wealth accumulation. Having clear goals can help you focus and less susceptible to emotional swings. Use automated tools. Consider using automated trading systems or alerts. So TradingView is really good with this. If you have the upgraded plan, you're allowed to put alerts, signals on your charts, on multiple charts, on securities, and have them notify you through email, at your trade station, or on your mobile. So last night I got a alert on during the futures market when gold came into that pocket. I wasn't at my trading station. I was playing with my kids at that time, and I got an alert on my mobile. I took a look, it was in that pocket. I went down to the lower time frames, I saw my setup, and I took it and made some money just like that by using automated tools. So they're very handy. We have a lot of technology that we can use today. These tools can execute trades based on preset criteria, reducing the influence of emotions. Limit media consumption. Constantly consuming news related to your investments can heighten emotional responses. Set boundaries for how much information you consume, and use reliable sources to avoid hype or panic-driven decisions, okay? Keep a trading journal. Hopefully some of you guys are continuing to do this. It's very important you have a trading journal. Document each trade, including the rationale behind decisions and the outcomes. Why did you take this trade? Like last night, if on my journal, if I show that I took that trade during the futures market, why? The reasoning why was because on Friday during Powell's speech, it was that bullish breakout, and I identified 50% of that pocket, and I was waiting for the volume to come in there. I waited all day Friday. Again, it didn't come in Friday. But remember, there is a saying, it will eventually come into that pocket because there is pending orders waiting there that have not been executed. So when I started to learn that, I really started to learn now how to master the patient and discipline game. So you can see how I've learned how to control my emotions in the market, and through all of that, I've learned how to be patient and disciplined. These are 2 or 3 of the hardest things for a retail trader to overcome. Learning price action is probably, in my opinion, the easiest thing to learn. Learning what a bullish candlestick is with a wick on a high and a low, that's the easy stuff. This is the difficult stuff. Once you start learning the price action, now the markets are really going to test your psychology. It's really going to test your patience, your discipline, how you handle your emotions, how you handle your winning trades, how you handle your losing trades. This is what will make you that successful trader. Okay. So reviewing your journal can provide insights into patterns of emotional decision making and areas for improvement. Practice mindfulness and stress management. Techniques like meditation, exercise, and deep breathing exercises can help manage stress and maintain emotional balance. I know this sounds silly, deep breathing techniques and things like that, but they do actually help. When you're stressed out and it's just breathe, guys. It's trading, but take it easy. I like to go to the gym. I like to work out. I take my stress out at the gym. I take it out on the weights where I'm doing something good for my health as well, working out, staying fit. But I take everything out at the gym, or I go in the sauna and I relax in the sauna and just in there. I don't think about anything, but just relaxing in there, meditating, breathing, okay? It helps you to just think about the day's trading. Like whether you had a good day, just go in there, think about it, what you did well. If you had a rough day in the markets, just, again, breathe, relax. It's not the end of the world. We got to learn from it and we can move forward, okay? Diversifying your portfolio. By not placing all your capital in one trade or one company, you reduce the emotional impact of a single investment's performance on an overall trading mindset. So hopefully everyone is not going all in 100% in just one security unless you completely believe in that security. But if something happens to that security and there's drawdown, you're risking your entire investment portfolio or your entire trading account. So it's not feasible, it's not advisable to throw everything all in one. You kind of want to diversify in case one security goes down, maybe your other ones are going up to negate that, okay? Seek professional guidance. If emotional attachment becomes overwhelming, consider consulting with a financial advisor or a trading coach. They can provide objective perspectives and strategies tailored to your situation and help you out. I'm talking trading coach. I'm not a financial advisor. So I can say that I'm a trading coach. I've helped a lot of traders over the years. I've gone through the ups and downs, so I can relate to you exactly what you're going through because I've probably gone through what you're going through, and I can give you some tips on how I overcame it and maybe help you. So, but if you need to speak with a financial advisor, you go to your local bank and speak with your financial advisor. Regularly review performance, periodically assess both the financial and emotional impacts of your trades. Understanding past mistakes and successes can inform future decisions and highlight emotional biases. Finally, adopt a long-term perspective. Trading is long-term, okay? Don't think short-term. I know we scalp the markets, that's short-term, but what we do with our gains and our profits is long-term. So you can kind of take your winnings and start to move them into dividend securities, what we talked about, passive income in blue chip securities that you believe in, like for example Nvidia, things like that, and get your money making you more money over time on a long period. So don't think short-sighted. Don't just think trading for today or tomorrow or next week. Think where you're going to be 6 months from now, 1 year from now. When you learn this, where's your trading going to be 5 years from now? Not everyone can even think about tomorrow, let alone 5 years from now. But I wish I had this kind of mindset when I was younger and learning to trade. Now I'm 43 years old. If I was to tell my 20-year-old self again how to do this the proper way, starting over with what I know, is everyone think long term, especially if you're a younger generation. Think long term. You will build wealth, but the thing is, you will build wealth. Whether it takes you 10 years or 15 years, as you get older, you will build wealth. You're not a lot of traders think that they're going to build wealth in 6 months and get rich. That's that get rich quick mentality. If you think that that's what's going to happen in the markets, you're going to have a rude awakening. I had that. I thought I was going to get rich quick, and I blew almost $50,000 not prop firm money, of my real money. When I was young, that's all the money I had. I was paying for university, working part-time, and put whatever money I had in the markets with no plan, trading on reckless emotions, on impulse trades, on get rich quick, over leveraging, and lost everything. So if I could go back and redo it, oh man, I would start with a different perspective. So hopefully you guys can learn this too. Okay, so this perspective encourages patience and reduces the pressure of short-term results, okay? In conclusion, emotional detachment is not about eliminating feelings, but rather managing them, okay? So that's important. It's not about eliminating your feelings, it's just managing them more professionally, them effectively to enhance your trading performance. By implementing some of these strategies, what I just mentioned, you can better navigate the complexities of these fast-paced moving markets, make more informed decisions, and work towards achieving your financial goals without the undue influence of emotions. Remember, trading is as much about discipline and mindset as it is about knowledge and skill, okay? So you can have a read on this. These are our blogs again. So this is the one I just read, talking about that passive income, learning more about dividends and things like that, okay? So those blogs are available for you guys. Let's just continue moving forward here, guys. Thank you to everyone. We hit 83,000 subscribers yesterday. So we do appreciate you guys. Thank you guys so much. We're about 17,000 away from hitting a big milestone here at SST. We've been working hard here for almost 6 years, on streaming for 3-4 hours a day, Monday to Friday, with myself and Dave. So we put in a lot of work in this channel. But we do appreciate you guys hitting the subscribe, liking the channels. So thank you to everybody who has contributed to this. And if you're on the call and you're one of these 83,000 subscribers, we do appreciate you guys. Okay, so thank you to everyone. So let's get into the charts. I'm going to do something different today. We always start with gold, and we spend the majority of time on gold, and we limit our analysis on NASDAQ and US 30. So I'm going to just switch it up today. I'm going to start off doing analysis on Dow Jones and NASDAQ. It's only 640, so I'll get these done, and then we'll do a nice thorough analysis on gold as we move into COMEX, and then we already have our US 30 and NASDAQ already done, so we don't need to rush into it in Wall Street. Okay, so is everyone good? We have 160 viewers on YouTube. If you guys can hit the like button, we do appreciate it. I'm going to get started with Dow Jones first, and then we'll do NASDAQ. And so it's switching it up a little bit, but I will get to gold. But let's just do thorough analysis on all three of these so we don't rush any one of them. Okay, so good morning, everyone. Thanks to everyone on Zoom for joining. Good morning, Daniela. Samuel, welcome. Wayne, good morning. Sonia, good morning. It's 4 a.m. for you. It is early, Sonia, but the early bird gets that worm. So it's not easy getting up this early in the morning, but that's awesome that you got it. Conrad, good morning. Thank you, guys. Sarah, welcome. Danny, that's true. I do support the Montreal Canadiens, but not the Bank of Montreal. I don't know why. I have no idea. I worked at TD Bank. Maybe that's what it was. And I kept everything there. I do have CIBC. I do have a couple savings accounts at CIBC, but that's all. That's it here in Canada for the financial institutions. And everyone on YouTube, thank you guys for joining. We do appreciate you guys. Lesh Buddy, welcome. You've been waiting. I just took the first trade on your funded account. Congratulations. Nice. That's awesome. Trading upwards, welcome. Crown and Kronos, good morning. Woots, welcome. MB, good morning. Welcome, everyone. Bogaza, welcome. I keep butchering that name. Marcelo, welcome, all the way from Brazil. Thank you for joining, brother. Okay, guys, so let's get started. We're going to get started with Dow first, okay? So this is how it's moving on the 5 minutes. Rather choppy, okay? But it is moving in an upward direction. But it could be that maybe, we have a downtrend. So it could be those staircases going up and an elevator coming down. So here was a push down. right there, it bounced back up right there. Then they went down for that new lower low. It came back up right there. There's that lower high. They pushed it back down right there for that new lower low. And now we're, slowly in a choppy way, making higher highs and higher lows right here. But it might, reach a peak again where it's going to be lower high, and then they might elevate or it come down. That's a possibility. However, if it is building some support now, maybe we will break these highs up here. So there is a little bit of resistance that could get broken. So we'll figure that out. But let's start off with a top-down analysis and start off on the daily. And then we'll move our way down, okay? I'm just going to have a sip of coffee. Excuse me, guys. Okay. So this is Dow Jones, US 30, Miss Jones. On the daily, some key critical areas, some zones, whatever you want to call it. This is one right here. So this was December of last year, okay? This is when we reached this top. That was a previous all-time high. And then you can see if you stretch that same box zone into the future, we came into this in February of this year, okay? And that's what created one top, two tops, and a drop, double top drop. And we continue to bring the same zone into the future, and we revisited this in July of this year. And what were the results? Kind of pushed back down. Didn't break structure, like the market did not break, it just pulled back. Lots of consolidation on these daily candles. It came right back in that red zone again, end of July, early August, and you see it got rejected back out again. We were trading in here last week, okay? You see how it was kind of consolidating in there, a lot of spin top candles. And then we had Friday, Powell at the Jackson Hole Symposium hinting that there could be a rate cut coming in September, and the market loved that. Look how bullish it was. So now look at, we are above this box, so it's not red. I'm just going to change the color to green and illustrate that it could be acting as support now, since we closed with volume on Friday above it, and now we're retesting it right now today. Our lowest point is retesting the green zone. Will it come deeper down into here? Will it reverse its way back out? Or is the selling pressure going to come back down and close below here, and we might have to flip this zone green, and maybe we're going to start selling off in the next few days, okay? But don't stop with this. Stretch this zone into the future, okay? That's what we trade off of, okay? So is there another zone below us? Like right over here, when the market pushed down, it kind of pivoted right here, kind of stopped right there. So maybe this location, let's draw like a zone right there, just in case, it starts to turn bearish in the next few weeks. Maybe if it comes down here around 43,500, we can see when it came down, found the buyers, and we went back up to the new all-time high. If it ever does retrace back down in there, maybe it could be some support. Maybe we can buy that. Might be a second bottom. There's one bottom. We might get a second bottom over here. But we're nowhere near this zone, so we don't really have to pay particular attention down here. We're going to pay more attention to this zone that we're transacting in today. So we are in an uptrend coming off of the bottom of the zone. If you see here, it made a higher high, pulled back, higher low, came up, new higher high, pulled back last week. We had Powell on Friday, which created the new higher high, and it's also a new all-time high. And right now we're pulling back into the zone, okay? So let's put a marker on our all-time high. I like to use orange, representing Donald Trump's makeup over here. Guys, off topic here. On Friday's call, on that Powell call, I don't know what happened over the weekend, but YouTube reviewed that session we had. I'm not sure what I said, because YouTube they don't tell you what was said, but they gave us a strike. So it was a pretty big strike. I'm not sure what it said, but we went against their guidelines, our policy. I have like the email I was reading. Let me see what it is here. But I'm not sure. Maybe I have to be careful with what I say. So I have to be careful, okay? Because we got another strike on our channel. I don't know what it was, but I don't want to walk on eggshells on these calls. I like to, say whatever I want to say. I'm not sure if it was what I like. Maybe they have some names. If you say a name, it triggers something. I know I mentioned Powell. Okay, Powell's in the news. I know I mentioned Trump a lot. He's in the news. I mentioned Putin when Trump had that meeting with him. I mentioned Netanyahu, and I don't know what triggered it or what happened. But again, I have to be careful. I don't really give a shit about these politicians, to tell you the truth. But with YouTube, you gotta respect their policy. I guess they don't have like a free speech on here. You can't literally have free speech. They try and tell you what you can talk about, or they give you some strikes. I don't know if it's giving financial advice. I have no idea. Like, I mentioned them, I emailed them back to give me like an explanation of what was said on the call or what was done, and they don't tell you anything. So I got to be careful. But if anything happens, YouTube, if you don't see SST here longer, hopefully that's not the case. But we are always on Zoom, Discord, or you can come to my house, or I'll come to your house and I'll help you with your trading. But YouTube, you got to be careful with this, okay? So again, I got to watch what I say on here. I don't know, maybe I said a swear word. Maybe they didn't like the swear word. I have no idea what it is. But that you get a strike, you get an email. They don't really tell you what it is. So that's it. I just want to mention that. But let's get back to these candlesticks now. So we've got the orange all-time high up here. And sorry, where was I? On the big bullish candlestick right here on Friday. Okay, so Powell's announcement here at the Jackson Hole. That's why we were saying identify big bullish candle that closed above. So if you grab your Fibonacci tool on this, I do the opening price to the closing price. Okay, I've stated this on many calls. I get this question asked a million times. Ron, why don't you go from the wick, from the low to the high? Again, I'm not right and I'm not wrong by doing the body, and you are not right and wrong either if you do the wicks. All I'm saying is keep it consistent. If you do from the bottom wick to the top wick, make sure when you go down, when you're doing your top-down analysis, keep everything from your wicks on the 4 hour, on the hourly, on the 15 minute, on the 5 minute, on the 1 minute. So you keep everything consistent. I like to go from the bodies because the bodies represent the opening price. To me, it's a little bit more important than just the lowest point. That's where the body of that candle opened. On this, it's a specific daily candle, so that's where the daily candle opened. That's where the market makers opened it at that particular price, and that's where it closed at that particular price. So I take the real volume, the real body. That's where I place my Fibonacci tool on this. Okay, so you can see there's the 50%. There's 0.5. So again, I'm going to keep everything consistent. On my daily, I use yellow lines. So right there, I'm going to place a yellow line. Okay. And if I find my zone, right there, it's one standard deviation or one ratio above and one below. So now I get that little bullish point of control of Friday's volume. Okay. And you can see that last night we traded right into it, okay? And there was a reaction. So we are currently trading in this zone right now, okay? I know it's a couple zones on top of each other here, but if I make it like a neutral zone just so we can focus on this, this is that point of control from Friday. This is our bigger demand zone below us from the all-time high previous, like over here, from this all-time high supply. But when we got a body closing above, that's why I made that big zone green below us. Okay, so you can see, and again, guys, I told you it's a waiting game. See, when we moved out of there, it didn't come all the way back in until Monday and also today. Okay, so you can see if you're waiting patiently, you can get a good trade in there, but you got to wait. Okay, the reason why traders are struggling is because they don't have patience. They can't wait a couple days for it to come in there. I can wait weeks to make some money. Okay, I've learned that over time. I can look at other securities while I'm waiting for this one. So that's another thing. If you trade like 3 of your favorite securities and you follow them, you're going to have specific zones on those securities. Maybe your first security might not come into that zone, but maybe your second one will. So you can always look for opportunities. I wouldn't suggest some traders say, okay, Ron, now I'm going to add 20 securities on my watch list and do this for everyone on all of them. But then that's when it starts getting real busy and you could lose focus. So stick with your favorite securities and map out these zones and patiently wait for the volume to come in here, okay? Especially when you got big moves like this or big candles. Again, this could be a 5-minute candle. It could be a big 5-minute candle that breaks out of here, and you can still figure out that 5-minute zone and stretch across. It might come back in 15 minutes or 30 minutes, but eventually when it comes back in there, it could pick up those pending orders and continue to go in its direction, okay? So let's just talk about the overall uptrend we're in. Okay, so we are trending up, started over here. Like I'm going back in mid-June. You can see that nice big run up we had. That was a new all-time high. It pulled back, but see, it didn't really break any structure, continued to go back up, then it came back down. See here, we came right into that pocket, came up, and a big bullish engulfing candle come out of there. And you can see 50% of this bullish candle. If you marked 50%, you can see we were just consolidating right above it. It created a bull flag. It was barcoding, bearish, bullish, bearish, and then you got that bullish engulfing candle close above and continued the run. Again in here, we were just consolidating. It was very choppy days, spin top candles leading into Powell's Jackson Hole and got that big push up. Okay, so we are currently in an uptrend. If you draw a daily trend line, like from down here, and you start connecting the dots, whether you want to connect the bodies or the wicks, that's up to you. I'm going to stay with the body and stick with the bodies. Again, I want to now complement my daily yellow line with, now I got this trend line on the daily candle, so I'm going to make it yellow. So my trend line also represents a daily trend line. Okay, this trend line doesn't represent a 5-minute trend line. It doesn't represent the 15-minute or hourly. I got this trend line by looking at my daily analysis. So it's yellow for a reason. It's representing anytime I see volume on a daily, on a 4-hour, on an hourly, or 5 minutes come back down to this yellow trend line, I know that it's coming to a daily trend line. And I can see how it's being respected, continuing to make higher lows, higher lows, higher lows. So it is ascending. Okay, so we got a nice trend going up. Here was previous resistance. You can see we broke above it, closed above it. Also, guys, when you get big moves, not just candlesticks, like right here, the bottom of this move, you see we have 1 bullish candle, 2, 3, 4, 5, 6, 7, 8. Okay, big bullish candles. If you grab your Fibonacci tool on a rally like that, just follow what I'm doing here. Grab your Fibonacci tool. Again, you can place it at the wicks if you like, or you can place it at the body. I place it at the body, from the bottom to the top. We can clearly see now where the top is, okay? Because you can see it came all the way up, and then it stopped right there, and then you see that push down, okay? So you see how I just positioned the Fibonacci from right here to right there, okay? Again, what am I looking for? I'm looking for a zone. Okay, where's my zone of this? There's the 0.5. Look, 0.5, look at it. The wick right there of that daily candle hit exactly 0.5. If you want to have a zone of this entire bullish leg, again, you go to the 382 and the 618, and there's your zone of this entire big move. There's your point of control. So you can see now, we can clearly see it came in there and went back up. Are we ever going to come back down into here? I don't know. But if it comes back in here, this could be a buying zone as well, because we're still above this point of control. Okay, so sorry, that's a little off topic, but when I see stuff, I like to always teach about it. Okay, so you can place a fib from the bottom of here to the top there, and also figure out a point of control. You don't have to do it on a single candlestick because it could get confusing. Everyone asks me, well, Ron, why don't we do it on this candle? Why don't we do it on this one? Why don't we do it on this one? There's important structure that you should always be looking at, especially if a bullish candle closes above structure. That's a candle that you should be looking for that point of control. Why? Because it's a powerful candle that closed above all previous structure. So there's something about that candle that's more important than just this bullish candle that formed down here. Okay, this one it closed just above the previous candle. This candle did not close above the entire bear structure behind me. Okay, so there's a big difference between that. Okay, so let's continue just talking here. So we have this big bullish rally. It pulled back on that trend line, higher low, continue make a new higher high, pull back, higher low, and we have that new higher high. Now we're pulling back again. Some traders are saying that that's it. This is the end. This is going to be the market crash of all time. I don't see a market crash. I still see blocks of demand. I still see it making higher lows. The market could still continue to rally, but maybe it needs to cool off a little bit. And maybe if we have the September rate cut, maybe that might cause the markets to continue to pump. But right now, we might need a little bit of a pullback. That's just me saying that. But when it comes in here, you know, there could be more buyers and bring it right back up. Okay. So from the all-time high from Friday, we opened yesterday, on Monday, and it came up. But do you see it came up? Did we take out that all-time high? No. So we have a new lower high from the all-time high. We had this bearish candle come down Monday, where right about 50% and close right there. Okay. So now let's look at today's open from yesterday. Okay. So I'm just going to kind of get rid of this zone right here. We closed right there and we opened right here today. Okay. So right there's a point of interest on the daily. 45,322. Closing price yesterday, opening price today. When we opened, we were initially bullish. We've already got a high wick where it's made a high of the day. That doesn't mean that that's it. This is the high of the day and it's set. The market could come right back up here and move bullish. Okay. So we've made a high of the day and it came back down to the opening position. And we also, the sellers took out yesterday's low. Okay, we can see it made a new lower low from yesterday and it came all the way down. There's our lowest point of the day, just tapped into that green zone. It just tapped right in there and triggered all of those pending orders, and you can see that the wick is coming right back up. So we've got buyers right now rejecting this move and bringing it back up to this yellow line location right over here. Okay. And we'll see if the buyers can bring it all the way up, push it, ask to trade back up here and flip today's daily candle. If they can flip today's daily candle, turn it into a bullish pin bar or hammer, think about if we start moving up, bullish, blue, 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 blue. I'm looking at, on Monday, this bearish candle. From the open to the close, 50% of it is probably right there, okay? Half of it. I'm guessing right there is about half of it. We don't need to guess. Grab your fib tool from the opening of Monday's price to the closing right there. You see how exactly I was right on. See my yellow line? It's right on 0.5 exactly, okay? So you can tell Ron hasn't smoked anything this morning because he's perfect right on there, okay? I could also find a bearish point of control from Monday's bearish volume right there. And I make it red and I can stretch it into the future of this week's trading. Will we come back into that point of control up there? If we do, we could come all the way up, flip today's daily candle, turn bullish, and when we come up there, it could get rejected and go back down. That would create a lower high from the all-time high, right? If the sellers are aggressive and don't want the market to come back up and test all-time highs, then they're probably placing a lot of offers here. If there's any buyers that want to come back in here, there's hopefully maybe as a selling point of control, there's more offers than there is buyers, and they more supply than there is demand, and then it comes in there and it maybe could push back down. That is an option, right? That is a possible path. However, someone will say to me, well, Ron, what if it comes up and goes through there? Yeah, you're absolutely correct. So when it comes and transacts in here, that's where we got to watch what's going on. Because maybe, like someone says, maybe it's bullish and we'll cut right through there, trade up to maybe the point of interest of these bodies. Let's say it's a bullish move right up there and closes up there. Then it could pull back into this zone again. But if it closes above there, then we invert this zone and we make it possibly green. And then it could, when we turn it green, the zone has not changed, right? The zone is still that point of control of that candle, but now we have buyers showing us the strength and breaking right through there. So it didn't get rejected with that option one. It closed above there. So when it closes above, we make it green, and it could show that the depth of market is changing with more buyers putting pending orders. Then when it comes down for the official retest, then we see it spike out of there. Then we know that it's holding with good buyers. The buyers are there. They're confirming the breakout move. And then when we see that, yes, it could continue to break out for that all-time high and start a new all-time high, okay? But right now, we have confirmation that Monday was a bearish candle. It didn't engulf everything from Powell's meeting, but it came down halfway. So that's a start, right? So maybe it will take 2 bars to come down to engulf Friday. That's what we call a dark cloud cover pattern, where it's 2 bars to engulf 1. Maybe we don't even come down in this green zone. Maybe today's wick is holding and we're going to flip today's volume and try and come back up here. So that's why I keep that zone as red above me right now. Until it transacts in here, then I'll figure out who's stronger, the buyers or the sellers. But right now, I like to identify it as an area of resistance above me. Maybe they are starting to protect the all-time high. Maybe Dow will not come and make a new all-time high. Okay, so we have to factor that in. You guys know what I mean by that? And then when we continue to follow today's volume, we're trading like right here. If it comes back down, if the bears are in control and we come back down to the lowest point, let's say we break today and come down lower, we know we're trading in this green zone, but where could it go down to? Okay, right here. Maybe we have, I would look also, guys, this is another tip for those traders that are having a difficulty deciding, should we maybe put a yellow line at where these bodies are? Should we put a yellow line at those bodies? Should we put a yellow line at those bodies? Okay, if you're this person that is, should I put it here? Should I put it there? Should I put it there? Let me make life easier for you, okay? The best place to put it if you're undecided is the entire green zone. It's that size for a particular reason when we measured it from back in December of 2024 to where it is now. Just go halfway, okay? Make life easy. Just go 50% of the green zone, okay? If you can't decide, don't get stressed out about this. Make it easy. If you can't decide where it's halfway, get your Fibonacci and just measure that entire green zone. Okay, you see, Ron, I told you, has not smoked anything this morning. Ron is spot on. Look at that. Where he guessed where 50% was, I was perfect, correct, right there at 50%. So I could leave my line right there, right? That's if you're undecided. If you can't figure out where to put it, just put it. Always think of what Ron says, the psychology, 50%, okay? If you don't want to put it there, and then look at the number, 44,897. It's a nice psychological number there too, 44,900. It's perfect area, perfect number. I'm going to leave it right there, okay? I'm not going to fool around with putting it down there, here, or there, right there. Make life easy, okay? And then if we continue, if sellers break that point, come down here, this is the only thing right there, that wick right there on Thursday, August 21, that will save the buyers. Because if they lose this position, look, we're right at our daily trend line. And that's where the sellers could overtake, break the trend line, and we start dipping down into here, okay? We don't have to worry about this today because we're up here right now. But we got to consider this for this week or next week, okay? So right now, that's what's going on the daily. Let's break down today's daily candle by going into a 4-hour. So there's Powell's big move from 10 to 2 p.m. Remember, I'm on the 4 hours now. So slowly, it's been coming down on 4-hour candles. Lower low, lower high. Lower low, lower high. This physical 4-hour candle on Monday closed below that zone. You see, we haven't came back up to retest this red zone as of yet. It's still pushing down. Lower low, lower high. Lower low. And then we had a bullish candle come up last night, during 10 to 2 a.m. Here's the European candle right here from 2 a.m. to 6 a.m. So I can see that pre-London and London opened bearish, came all the way down. That's what made our lowest point of the day so far. And it came right back up. It closed as a hanging man candle where there's still some selling volume. We have not flipped that body as of yet. Right now we're kind of maybe barcoding where we got a bearish candle, a bullish candle. This was bearish, came back up with a wick, but still have that bearish volume. And this is our 4-hour candle. I don't know if you guys can see it right here, but this tiny candle right here, this little doji, it's already been moving for 1 hour and 8 minutes right now. We still have 2 hours and 52 minutes before this candle closes. Will sellers continue to push down? We'll fill those wicks and test today's daily low, or are we going to start to come back up and find some support? Okay, so where's an hourly level? You see this big bearish candle? If we're just eyeballing 50%, there's a wick and a body and a body. Let's just put a point of interest right here, okay, with a white line, because anytime I'm on the hourly, whether it's 1 hour, 2 hour, 4 hour, I like to use a white line. The white line tells me the difference between the yellow lines, okay? But right there, I can see when that bullish 4-hour candle came up and closed right there. Then the next one opened, we're still below this. 45,267, 270, we're still below it. Are we going to get hourly or 4-hour volume to maybe close above this white line and then maybe make this support? Then we're going to go into buys, maybe start to push back up. Are we at the point where we're going to curl back up? Because when it came down here, it went back up. We had that bullish candle come up, but right at that 50% of that 4-hour point of control, it came right back down. The sellers pushed it all the way back down. It is lower than that previous low. That's where we hit the low of the day, but the buyers brought it right back up, but we still have that bearish head. So now, is this 4-hour candle going to come up back up bullish? Are we going to barcode in here? Bearish, bearish, and come back up bullish. Then we're barcoding, and then maybe they will break it back up, or this is going to be a bear flag and we're going to continue to push down today. Okay, so now when I look at the overall kind of pattern on the 4 hours, what pattern do you see? I see it come up, one move, find a top, come back down. So our neckline looks like it's right around here. So technically we might be coming back up. That could be a lower high in there, maybe a double top up there, or maybe a new higher high breakout. But we got to still get up back up to that purple line before we can get up to that red line. We got to get back above that hourly white line before we can do anything. So let's say, for example, it does come back up here. It could go back down and make this type of move. That could be the lower high, and then we got new lower lows. Okay, it could just flag in here, consolidate in here, and go up, come down, cool off in here, and continue bearish coming through here today. Okay, so remember what we said with Cook in the news that Trump got rid of in the Fed. That could have an impact on the markets today when Wall Street opens. Okay, could see some selling pressure. If that's the case, we might continue pushing down. But if we sell off, we gotta be ready at this yellow line, 44,900. That's 50% of this green zone. Buyers could step in there. Look at where this 4-hour candle closed, right above that yellow line. Look at what it retested, that yellow line. That's what started that big bullish move leading into Powell's conference. Okay, so that is support below us, and we do have support there. Right now, you can see that the 4-hour candles are consolidating right now. If we go into the hourly, we can see it how it looks a little bit more visual here on the hourly. There's Powell's 9 a.m. There's the big Powell move on Friday, 10 a.m. Since then, we've been making lower lows, came back up, lower high. Pushed down for a new lower low, came back up, lower high, new lower low. It countered back up right up there. That's now I can see when we hit the highest point of the day. That was during the futures market, 8 p.m. And we came back down. So you see it came all the way right back up. Again, by that white line, there's that big bearish engulfing candle coming down, 2 a.m. That's pre-London. Here's London. London is what made our lowest point of the day, and it looks like it wants to continue to come back up, but it's lower high, lower high, lower high. So sellers are still in control until maybe we see bullish hourly volume maybe close above that white line. That could change the sentiment and the momentum to come back up to the purple line. Okay, so see right now how it's building right up here. When that hourly candle came up to that white line, 50% of that bearish candle from the futures market back down. tested it one more time, right in there again, pushed it back down. It came bullish and closed strong up there. Then pre-London took it right back down, bearish engulfing, and pushed us down. Now we could be coming back up there. It could come again to that near that white line and get rejected and go back down again, right? So we do not have any hourly volume closing above this white line as of yet. So in order to go bullish or reverse this bearish move, we got to get some hourly volume closing above that white line, okay? Do we have some hourly support now in the market? I can see that long wick that came down, volume closed right there. Again, that long wick that came down, there's a body and a body. So far we have two bodies right there creating some sort of hourly support here. Will the sellers come back down? When it comes back down to 45,175, we got to watch. Maybe we'll have some hourly double bottom support, or if they break, they got to fill those long wicks to take out the lowest point of the day, okay? And then look what we have in the green zone. If we lose today's purple low, we're trading in the green zone, all we have behind us is 9 a.m. from Friday. That was Wall Street leading into Powell. Okay, can we figure out 50% of that bullish candle to see how there's no trading like inside here? It was just that huge bullish push. So what if it needs to come back down here and fill a little bit of an imbalance fill? Where's 50% of that bullish hourly candle? Right there. There's 0.5. So I'm going to draw a white line right there in case we do trade down into here today. Like for example, if the sellers are strong and they come back down to the lowest point of the day and break it, maybe it comes right there, okay? And then that's where the big hourly buyers are waiting. And then maybe that's what triggers the market to go back up. If we cannot hold that hourly white line, there's the bigger daily line waiting at 44,900, okay? So we got to watch that if it comes down there. That's why I mark it on my chart, okay? So far the hourly is coming down, right? And maybe this could be a bigger move where we're going to bounce back up. So if you look at it like this, big Powell's move on Friday, we're retracing all the way back down. So maybe it might trigger next move to go back up. Maybe it will come back up to today's daily high, purple line, maybe to that 4-hour red zone and go back down. However, it could come back down and create a higher low here, and then we're continuing to break out, close above, we make it red to green, and then we're coming right back to an all-time high, and that could be the bigger double top up there, and then the bigger drop, okay? So you know what I mean? Just let's take it candle by candle. Let's see how things are building leading up to those points. But right now, we cannot neglect how strong the selling pressure is coming down, okay? It's basically almost engulfed all of Powell's speech. You know, it's almost retraced all the way back down, okay? So if we look at how it looks on the 5 minutes, this is how it is on the 5 minutes. Right over here, here's the 8 p.m., okay, futures market right there. It came up. We can see when it hit now exactly the high of the day. It was 8:15 p.m., had the big sell-off from there, came back up. You see now the white line is my hourly resistance. You can see how the 5-minute candles are struggling to get above there. They come back down. That's a higher low. So this should have been a big leg that closed above. It failed. Sellers brought it right back down. You see how it's still holding good support here on the 5 minutes. It came up a third time. It got kind of some volume that closed above, but then they continue to push it right back down. And then this was the big drop at London, 3 a.m. That's when we made our lowest point of the day, just after London market open, 310. And since then, since London, it's came back up, okay? But that's technically a lower high from here. Pushed back down. It's got higher low, coming back up, created new higher high. And now we're just kind of choppy consolidating right at this daily yellow line, okay? So this could be what I was talking about, those slow staircases going up, and could be an elevator coming down, okay? So see how ugly these 5-minute candles are now? See how they're trading? This is where you can kind of maybe trap this volume right here. And we just watch and see who accumulates more. So it's just, this is not good for 5-minute trading or scalping in here. Will the buyers continue to bring it up, close it above here? Will we fill up to that hourly white line? Or will sellers continue maybe to push it below here, and then we drive down to the hourly white line? If it breaks, then we might come down to the daily low. But before we get to the daily low, there's 5-minute support being built right here in the market. right here. There's a body, a retest, a wick, and a wick. So if we lose our hourly support, maybe it comes down to that red line, and then that's where the protection is from the high of the day, and then buyers will bring it right back up. If we're selling down in there, we maybe got to realize some profit, because we got to respect that buyers are building all the way from London, showing us how it's building. Okay, so right now we'll watch US 30 for a little bit. Key selling zones right up here. See, just above my white line up here, I'm going to make a red zone up there just to illustrate to us. If it comes in here, we could be selling, right? We want to continue to move down with how the trend is moving. Lower low, lower high, lower low. Here it came in there, they pushed it down, but no new lower low, came in there, double top, no new lower low, came in there, triple top, and then they broke it. There's the new lower low. Okay, now we are coming maybe back up. If we come back in there, you know, they could reject it right back down. Okay, so that's why I'm stretching that into the future for today, to keep an eye on that block above us. Okay, so we can see how we are trading in here. Okay, so that's US 30. Let's add our daily SST daily bar indicator beside us, just to remember how we opened. We opened up here. It was initially bullish from the opening, and then that's where we created the high of the day. Then the sellers came in. They pushed all the volume all the way back down to the lowest point of the day. That was just after London, 310. And London's volume right now coming out of Europe is causing this wick to come right back up, but we still have this much bearish volume left in our daily. So if we are buying, we're counter trading today's daily volume. Okay, yes, we could possibly flip it bullish during Wall Street, but maybe it will continue just to come down and fill today's wicks. Then we got to sell with the market. So either we sell below this structure, or we sell at this red zone up here. Okay, we can add now some EMAs. EMA 9 is, we're right in the EMA 9 zone, and the EMA 200, you see guys why it's better to maybe sell at this red zone, because now we have a white line which is illustrating our hourly, 4-hour or hourly resistance. We have the 200 EMA now complementing our zone, adding confirmation. If it comes in there, maybe we have our 200 EMA there as well. So for example, if it comes up, that could be a selling point to push the market back down. Okay, so that's why we got to watch that. So what I do at that white line is I place an alert in there. Okay, at some point, if it comes to me, I will get alerted, right? Whether it happens on this session, it happens tomorrow, or it happens next week, I'll get an alert when the volume comes in there, and then I watch and see. Will it get rejected? Will a bearish engulfing candle print in there? Will it be a double top up there? Or will it flip? Will the buyers actually be strong, close it above there, and then I flip the zone green? Then this could turn into a floor, like hourly support. We might have volume above the 200 EMA. The 9 might be creeping up there. We might be getting ready for a bullish crossover, and we could, you know, start to move back up bullish up to this yellow line. Okay, so that's what I look for. My bias is to sell the red zone. However, if the buyers can prove to me that when they come up there, they break through and they close above it, then I have to acknowledge that it could be a supporting zone, pull back in here, and maybe go back up like that. Okay, so, but why I place an alert is because it's a specific point of control, a specific zone, that when the volume comes there, then I have to watch and see what's happening. I don't want to just blindly trade up there, but I want to see how the bars close. Okay, so that's what we got for US 30. It's 720 right now, so that was a pretty thorough analysis on US 30. We'll leave it right over here to the left of the chart. I'm going to do NASDAQ, and then we got to get ready to do gold, because we're getting close to COMEX in another hour. Okay, so on NASDAQ, let's take a look over here. And remember, NASDAQ, NVIDIA, we have earnings tomorrow in the after hours. That will affect NASDAQ. So we got to pay attention to how the markets are moving going into NVIDIA's earnings. Okay, so over here again, I can see that it was a previous December all-time high, pushed down, came back in that red zone, pushed back down, came back in here early February of this year, push back down. So that's a red zone. We stretch it into the future. You can see we came in again in June, push back down. Now, however, I can't say that anymore. Now we have bullish volume closing above it. So the zone remains the same. I just changed the color. And now I stretch it into the future. So now this zone, this block is representing buyers. If we ever come back down in there, if it sells all the way back down into 22,000, I might be looking to buy that zone, right? If you want to place an alert in there, this is how I do it. Right in the middle of the zone, I like to go right in the psychological midpoint. It's on a daily, so I make it yellow. I can throw an alert in there, and it's created. Whether it comes in here tomorrow, next week, next month, next year, 5 years from now, when it comes in there, the volume will come in, alert me, and I watch and see what will happen. Maybe it's a double bottom coming out of there. Then I buy the break of the structure, right? What happens if it does something like this? It bounces, it's a lower high, comes back down, closes below there. Then it could be a red zone and selling zone, right? I just stretch that zone into there with the volume closing below. I make it red. I could be selling that pullback, okay? But regardless, there could be some trading going on at this zone when it comes back in here. We're nowhere near this, so we don't have to really entertain this zone for now. What we got to watch for is when it pulled back right here, these two strong days, it stopped right there. That's what we call a pivot in the market. So anytime you find a pivot in the market, either mark it with a line or a zone. That's up to you what you want to do. I'm going to use a zone because I can see that I've got a wick, a wick, a wick, and a wick behind me. Okay, sometimes you got to utilize a little bit of analysis behind you that's already happened to help predict where the future move could be. Okay, that's price action 101. Candlesticks tell us a lot about the past. Okay, I can go back on NASDAQ and see how it's been trading. I can go back, look, I'm on the monthly. I can see how NASDAQ was trading back in 1999. I can see in 1999 we had that big push. Remember the big tech internet.com era, and then we had that market crash right there in April of 2000. I don't know if you guys remember it. I do. I was 18, 19. This is when I was learning how to trade. During this, I bought the hype and I lost a shit ton of money on the way down. Okay, and I learned my lesson. But knowing what I know now, if I marked that high as the resistance, and you see right over here, back in 2016, we started to close above it. So this high back in 2000 was resistance, took a big dump back down, but it took 15 years to build its way back up. But now we've got volume closing above, turning to a floor, turning to support. Okay, and look at how it's been moving since then. Here's another top right here, 2021. Remember we went through COVID and the markets made that big pump right there. There's the resistance pivot, 16,500, and look at the rotation right back down, right down there. So it came back down to 10,000. This was just a couple years ago, guys. This was 2022. This wasn't like 20 years ago. You know, this was just a few years ago. There was the supporting level. Now we came, look at it. Does it look familiar pattern? We came back up. There's the closing bar right above there. And then your retest, okay? 2024, we were trading this. We bought this rally, guys. Right up here, and then look at where it came all the way back down. Look at that. That was April of 2025. Remember Trump's liberation and everything? Look at where it came down to. It specifically came right back down to that yellow line. There was the resistance. It turned to support. Had you been waiting here at 16,650 with a pending order, you would have been alerted, or you could have had a pending buy, and look at where you're trading at right now. So, you know, candlesticks tell us a story. They tell us the past. We know what's going on in the present time right now. And with probabilities and patterns, we predict the future, right? That's welcome to price action trading. That's how it moves. That's on the monthly. You know, when you want to do a bigger outlook, monthly, go weekly. This is for weekends, guys. This is your weekend homework to kind of see how we're moving. Look at this strong weekly move. These now candlesticks represent one entire week of trading, let alone we look at 5-minute candles. Like these are weekly. You can see we're in a strong weekly uptrend. We had a weekly candle close above structure. We continue to build, but now it looks like the weekly candles are cooling off a little bit. Okay, so back to the daily. Sorry guys for that little, but I want to show you guys, you know, why we look at the past, where it's trading right now today, and then we predict where it can go in the future. How do we predict where it can go in the future? By marking your zones and stretching them into the future, guys. Okay, so another key zone that I'm looking at is, what about right up here, where the market kind of impulsively broke out of here. Okay, if I bring this now I can see, like, look at how I'm bringing it. I bring it where that bullish volume is in there, that bearish bar closed right in there. Then we had that bullish breakout again. So you see how it's acting as support. Now when that big bar came in here, see how it closed below. So what do? We flip that zone red. And then I can see we just traded in it on Friday. Powell right in there, came in there, and now we're kind of moving away from it. This is a red zone, okay? Are we going to come back in it today, or are we going to kind of move back down? Stretch it into the future. That's what I mean. Stretching it into the future. Now we can see our all-time high for NASDAQ is right up there. Orange line for Donald Trump's face. There it is, 23,985, just shy of 24K. Okay, so we came up there, and now lower low, lower high. Lower low, lower high. Equal low at that green zone, came back up, spin top. But then Tuesday of last week, big bearish bar closed below it. And we continued to push down all the way down. Sorry, this was Powell's announcement. My bad. I had the wrong Friday over there. But here was where we came down. Powell brought the market right back up. But you see, it traded right into that zone, and we're kind of pushing down. Now let's continue to look for some key daily points of interest. Here I have a body to body. Let's place a yellow line right there. Let's keep it easy and simple. Yellow line at those bodies. Okay. And then I see that there's a wick that broke below, came back up. A wick that broke below, closed right at that yellow line. A wick below, and continued to come right back up there, close in there, okay? Can I place a line at 50% of that red zone? Yes, right there. There's the halfway point right there, okay? Now, there's Powell's candle. 50%, guys. We were talking about this. This is how, guys, if I show you on Discord right over here, not me, not Dave. I'm showing you our Discord over here. I believe it was, let's see, commodities. It was Serge and Jay right over here last night. See the time, 9:10 p.m. Eastern, 1 hour after. Look at Serge. Entry was beautiful. The man almost made, $14,000 profit by waiting in that pocket of what I'm going to show you guys. Pending buy set off, taking a couple weeks off. Congratulations, Serge. The man is taking a couple weeks off of trading by just identifying that bullish pocket, had a pending order in there, and got filled and made out with 14K. Also, Jay over here, I had that zone marked on my chart and was sitting by the computer for no reason. Seen it tap that zone, was about to jump in, but was like, I don't trade at this hour. Like, that's not discipline, took off, and then I'll wait for the retest. So you see what I mean? Some traders are identifying these now. And also we hit it as well. 50% of the pocket is legit, we were saying over here, okay? So guys, how did some traders identify that is I'm showing you right here. If we go back to NASDAQ, there's the big bullish candle. Grab your Fibonacci tool, guys. Like I'm teaching my kids how to do this. My daughter's 9, my son is 14. These guys are going to be professional price action analysts by the time my daughter goes to high school. Okay, my son's starting high school next week. So, but he's not really into trading. But don't worry, I'll get him into it slowly. I don't want to force them, but I'll let them pick it up slowly. Right there. There's 50%. You can see how the bar came right in there, triggered, and went right up, okay? If we're finding exactly, not just 50%, but the entire pocket, the whole zone, point of control, whatever you want to call it, it is right there. See how it came in, activated all those pending orders, and the result is bullish coming right back out of there, okay? So stretch this into the future. We may revisit this pocket at another time. So now we know how deep it came down in there, because when I measure with a purple line today's lowest point, I know how deep it came down in there. Okay, so let's just talk about, remember Friday, Powell. Why was this big bullish candle during the Jackson Hole? Powell hinted that markets are doing well, labor market is doing good, inflation is okay, tariffs, we still gotta monitor it, but maybe it's time we consider cutting rates, okay? It was not his exact words, but he kind of hinted it, and then the market loved it, very bullish. So we made a high, closed near the high. We have the weekend now, Saturday, Sunday, we're relaxing, markets open up. So on Monday, we came up. Look at the highest point. It's below Powell's high. So it's a lower high technically in that red zone, okay? And then we came all the way down. That was yesterday's low. It came back up and closed with a little bit of bearish volume, okay? So can we figure out where 50% of yesterday's bearish volume is? On any candle, right there. If I'm pinpointing half of it, it's right there, okay? Again, let's measure it. Let's not guess. Opening price of yesterday, closing bar. Holy, Ron is right on, okay? So maybe Ron needs to take a break and go smoke something, because look at how precise I am by just guessing where 50% is, okay? I could even find a small little point of control, bearish point of control of yesterday's volume and stretch it across. But it might be too many red zones for everybody and get confused, okay? But that's where we can really dissect, okay? So there's 50%. I can see today. Now, look at where we closed and where we opened today. Points of interest. Daily bar closed, daily bar open. No gap up, no gap down. So just a clean transition from the close to the open. We were initially bullish when we opened, right at market open. We can see today's highest point right there. That's where I placed my purple line. 23,465. It's today's daily high for NASDAQ. Okay, it already came up there. We are still technically below 50% of yesterday's candle. We're still technically below from the high from yesterday. We're still technically below from Powell's high, and we're still technically below here. So sellers are offering. This red zone is strengthening as I'm speaking. Probably offers are getting added into the queue right now as I'm speaking up there. So if it ever comes back up there bullish, they're going to transact with a lot of sellers. Will it come back down? That's where that battle will begin up there, okay? But right now, we don't even have to talk about this red zone because we already came up today. They already established the high of the day. Sellers are there. They can show us. They rejected it back down to the opening price. And look how strong today's daily bar was, how strong it was. I'm not saying how strong it still is now, how bearish it was. It came down bearish, bearish, bearish. Notice we took out yesterday's lowest point. So that's a fresh low from yesterday. We got to identify it as a point of interest. It continued to push down bearish, 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 bearish. There's 50% of that bullish candle. You can see it just traded just a little below it, but the buyers gobbled it all up. It activated all of those pending orders. All of these pending orders that were waiting patiently, trying to get in on a pullback on Friday, including myself, okay? So I'm speaking for myself now. I'm not speaking for anybody else. I'm personally talking about myself. The call was on Friday. You can go back and watch it. I identified the zone, and I had an alert in there. And I said, guys, I'm going to wait all day Friday for this pullback. It never came in, okay? I still had that alert and that zone over the weekend, and it gave me the alert last night, just after 8 p.m., 8:30 during the futures. I told you guys, I was playing with my kids at that time. I got the alert. I ran to my laptop, I watched it, and I bought that move coming out of there. So I was not even at my trade station last night. It came into there. I didn't have a pending order. I had a pending signal. So when the signal came in there, I watched it. I saw how it moved on the 5 minutes, and I got in a buy. It came directly right in that pocket. All of those patient buyers that were waiting from Friday were waiting on Monday night. So that's what I mean, guys. When you identify a point of control, put a signal or an alert or watch it, okay? And that goes with what I was saying earlier. My younger self, when I was trading, would never wait for that. I was always trading on impulse up here. Like, when the candle opened, I would be buying the open, and then they'd bring it down on me and cause me in drawdown and lose money and get mad at the markets and revenge and this and that. And now I've learned over time, if you just patiently wait in there, let all the noise happen, and it just naturally comes right in there where all the buyers are and activates them, and you get a nice push up, okay? So it came in there, and the market moved back up above, right through this green zone, and we're above this point of interest of yesterday's low, and here's the volume. So we still have this bearish head of volume, okay? There's about 50 points to get back up to today's opening position. What if today's candle flips and turns into a bullish hammer. We could be breaking back out to transact back up here, okay? So we can look at this as, you know, a pullback. Like, look, here was the bullish move, hit the all-time high. We've retraced all the way back down to here. Higher low support, created support, came back into that red zone. They're pulling it back, but look at, we're still holding now 50%. So what if this is like a higher low support where, you know, some traders are waiting for that technical double bottom down there, but now it's got that higher low. So all we're looking for is today is, can they flip today's daily candle bullish? And then maybe we drive back up to the red zone. Maybe it might break out for the new higher high, okay? That could happen. But just noticing how today's daily candle so far came right in there and boom, launched right out of there. So let's look at it on a 4-hour. So this is how it looks. So prior to Powell over here, we had it in a downtrend. The market was trending down. Powell stimulated the market by saying that there's a possible rate cut. He was very dovish the way how he was speaking. So the market loved that. Big bullish move. Now you start to see the 4-hour candles transact in there, go back up, double top. They came back down right in there. And then we started to move out of there. But now look at, okay, so we had that bullish 4-hour candle come out of there. And then it came back down bearish, bearish, bearish again in there. This is during the European 4-hour candle and from 2 to 6 a.m. and it came back up, closed right above there. So it was initially bullish right now starting 6 a.m. Came up. That's a lower high. We're still below today's purple line daily high. We're still below 50% of that daily candle right there that I was looking at. We're still below this supply zone above us. They've rejected it and now we're coming right back down. We've got 4-hour volume accumulating. Bearish, bullish. That was bearish. Went back up bullish. Now we're coming back down bearish. So if this selling pressure comes through here, it might, you know, fill that wick and continue to push and take out today's low. And if the sellers can get through this point of control and close below there on an hourly or 4-hour, we might be flipping this green zone from Powell to red. And it might now start getting more offers and we might even still start pushing down even further down, okay? But it looks like maybe we could be building to make our way back up, okay? So when you look at it like this perspective, where we came up, it came back down, we're kind of consolidating in here. They could definitely flip this 4-hour candle and bring it back up. But right now, it's already been pinned and it looks like it wants to come down further. Maybe we'll transact back down in the green box. Maybe it will create like a double bottom and go back up. However, if it closes below there, we make it red, could come in there and we're selling back down all the way down to here. And then the market is still making lower lows, lower highs, new lower low, a lower high, and we're dropping, okay? So I don't know how the market is going to react when Wall Street opens to Trump firing Lisa Cook from the Fed. That's, you know, could impact the markets. I don't know if it's the Wall Street is going to see that as something positive. It's probably negative. So, you know, if we're continuing to look at this, we see selling pressure, but we got to be careful in this zone where there's a lot of buyers, but it's already been activated. So, you know, there's orders being reshuffled right now as I'm speaking. Okay. So if we look at it on the hourly, there's Powell's big move. You know, like we identified 50% of it on Friday, but you see it didn't really come back in until a Monday morning, push back up. And then this is when it really pushed down there. There it was. The futures move pushing down, came in there, and then we had that big move come right back up. Came back down, came in, and now we're coming back down. So it is making a higher high, a higher low, a higher high, but if we look at it from over here, we are still pushing down. So we have now a big bearish candle coming down. I want to see in the next 20 minutes, will NASDAQ close below this yellow line, this daily point of interest, okay? And then if it closes down bearish, we'll figure out where 50% of this hourly candle is, draw a white line, because that could be our point of control going into the next hour, okay? So far it still looks bearish. That big drop coming back up, lower high, maybe we have an elevator coming down, okay? So that's what we got going on right now. So you see where we're trading on the hourly. It's just right above that point of control from Powell's speech. So this is what we have to be careful watching as we go into Wall Street, okay? Let's add our daily bar indicator, SST indicator right here. Here's the opening price. Oh, sorry, I'm on the hourly. My bad. Let me just go back to the 5 minutes. Okay, so this is what we got going on the 5s. Okay, that big drop, there it is. So you can see what I was talking about. The big drop right in here, okay? Came down, 8 p.m. right in there. and then pushed right back out. Came all the way back up, then they pinned it all the way, came back down right there. There's exactly 50%. There's that yellow line. And there's the lowest point of the day right there. And look at the results. When it activated all of those, look at those bullish candles just break right through there, okay? If you measure that move, could be possible daily goal. That move right there is like 70 pips just coming right out of there, okay? Pulled back, higher low. Okay, see right there, so where I'm going to draw now a red line, that's a pivot point on the 5 minutes right there. Look at wick, equal low wicks. Look at with that wick as well, right coming out of London. 310 is holding that red line. So we're holding 5 minute support there, okay? So we came back up. We do have this 5 minute resistance in the market that I'm looking at because I'm looking at previous price action. See where it came down. It stopped right there at that wick, representing 50% of there's futures market, 8 p.m. So we still got volume below there. See where it came up, touched that red line, pushed back down. Here we closed above it. It came up to the daily point of interest, and then they're slamming it back down right now. So if we come back up to this red line, could be resistance. The daily yellow line holds more weight. That's the opening price. There's our high of the day. If we do come all the way back down into the green zone, we got to watch this red line because there's a big wick right there. There's two tweezer bottom lows right there. If we can't hold today's red line, we're going to come down, trade maybe at the daily yellow line or the lowest point of the day, and we watch what happens down there, okay? So this is NASDAQ on the 5 minutes. We'll continue to watch this. EMA 9 is this green line. EMA 200 is right here, the purple line, okay? So we're going to keep these two side by side. Right here, here's NASDAQ on the right, and we got US 30 on the left, okay? Okay, so we did something a little different today. We did our indices first. I wanted to not rush these because normally we do gold, and then like round 9, we rush NASDAQ and US 30. So I want to take our time, you know, and watch how things move now going into Wall Street. We have a lot of time. But if you guys are good with that, I'm going to also do gold, okay? And then I'll have all 3 charts done for us by 8 a.m. We have 20 minutes till COMEX. 8:30, we have our U.S. core and normal durable good orders news, and then we move into Wall Street. And we'll see how Wall Street reacts to this news, guys, right over here. Trump oust Fed. This is Lisa Cook over here. There is sufficient cause to remove you. So he's removed her. President Trump claimed, like this is not me making this up. This is right here. This is an article from Yahoo Finance. President Trump claimed to fire Federal Reserve Governor Lisa Cook on Monday night. This was last night over allegations of mortgage fraud. Okay, these are his words. He's saying that she did mortgage fraud. Is there truth to that? I don't know. We have to hear her side of the story, right? Could just be BS for all I know. Like, I don't know. But this was just released last night. We'll see how Wall Street reacts to this news when the market opens up, okay? This is pretty significant news. Someone will say, Ron, this isn't important. Who cares? I don't think so. This is the Federal Reserve. You know, they have a committee of 12 chairpersons. Powell, we're only focused on Powell because he's the head chairman. But there's 11 other individuals who have a vote at the table, and Trump just removed her, you know, like without even voting, without even consulting the other chairpersons. He just got rid of her, okay? So I don't know the laws in America, if that's okay, if you're allowed to do that. Maybe someone can enlighten me and let me know all about that, but that's pretty important news. So we'll see how the market reacts to that when Wall Street opens up. Now, I'm also not a president. I don't understand. Maybe he has the authority to do that. Maybe he doesn't. I don't know, okay? I'm not a president. Okay, how is everyone doing? LeBron, welcome, bro. How's everyone doing on YouTube, guys? If you want to give us a like, we do appreciate it on that analysis that we just did. Leave us a like, guys, if you guys can. We do appreciate it. Subscribe to the channel also. Let's see if we can get, oh, amazing, guys. Let's see if we can get to 83,050 today. You know, those nice psychological numbers. I know we can get to 25, 4 more points. Let's look at this as ticks. You know, our subscribers can be ticks or pips, okay? Can we get to 83,050? That would be 29 pips from now, okay? So it's like, can we hit the scalps on the likes for a nice 29 pip move? Thank you, guys. We do appreciate it, okay? So if you guys are all good, we're going to do gold now, okay? So we did a little bit of analysis, nice analysis on US 30 and NASDAQ. You know, if you're trading it right now, just be careful. I'm going to be doing now gold analysis and full top down, because gold is pretty important too. We do like trading gold as well, but at least we don't have to rush into our analysis, okay? So let's check out gold. This is how it's trading on the 5 minutes, okay? So again, guys, this is another thing. See this move right here? This move right over here. Okay, see that? That was a pretty significant bullish move, okay? So I'm going to make this easy for everybody. When you see a bullish move like this is what we call like a parabolic move, where it's just like single bar candlesticks just moving higher and higher and higher and higher with basically no pullbacks. What you can do, guys, a lot of traders are struggling with, Ron, which point of control do I decide? Do I decide on this candle, on this one, on this one, on that one, on that one, on that one? I'm going to make this super easy for everyone, just as if we were teaching our kids how to do this. Okay. So I'm going to do both ways, however you want to do this. Let me do this way because I normally do the bodies. I'm going to show you now the opposite, how we can do the wicks. So if you just grab your Fibonacci tool, we can clearly see that that was a bullish move, very parabolic, okay? If we just want to figure out the point of control of that entire move and not just one specific candle, how do we do this? Grab your Fibonacci tool. When it's bullish, you start from either the opening candle at the base of the candle or the volume or the wick. So if I start it right there at that wick and it's a specific time, 8 p.m. Eastern, this is the futures market, okay? So it's a really important time. You could do the same thing with Wall Street market open. If you wait like 1 hour after Wall Street and does something like this, you can do similar if it's London. You can do a very similar move on if it's high impact news like NFP or FOMC. If you see a big move like that and you haven't taken a trade and you want to catch a nice pullback, how do you do it? This is how we do it. Figure out the bottom point and figure out the top point. Very easy, okay? See what I just did there? All I did was connect the bottom right there. Those two wicks are the bottom. I'm using this purple line so you guys can see this, okay? And then I just connect it to the top right there, right? As easy as that, guys. We got that? Just connecting the bottom to the top. And someone will say, well, Ron, how do you know that that's the top and this isn't the top? You can clearly see how it came all the way straight up, and then there was like a reversal coming down. This is not the top. This is just a cool-off candle, and then it continued to make another high. This is not the top because it was a cool-off candle and continued drive. That looks like they cooled it off, and then it started to push down. So right there, I can connect the dots from right here to right there, okay? So now that we have our entire range of that move, where is 50%? 0.5, right there. There's our 0.5. Now I can see, look at how it almost came in right there and went back up. Look at right there how it came. This is London now, okay? So if I was doing my trading at the futures market, 8, 9 p.m., when did this move end? It ended around 11 p.m., okay? So kind of when I go to sleep. If I mark this up and I got up for London, look at London. 3 a.m., 3:05, 3:10, 3:15. It tapped right in there. I could have got an alert, woke up during London with one eye open and put in an order and made a few pips just coming out of there blindly. Like just, it retested there, it went back up for 100 pips, okay? While you're going to the washroom, you could kind of get an alert, go into a buy, stop loss below there, catch yourself 30, 40, 50, 60, 100 pips, get out of there and go back to sleep. Okay, look, it came right back in there again earlier this morning. And look, it's still going back up. So you had multiple opportunities to buy at exactly 50% of that bullish move. However, there's a zone there as well. Okay, so we don't always got to go with just the 50%. There's your zone right there. There's your entire zone. So now you can see when it comes in, goes back up. Comes in the zone, goes back up. It came back in that zone, back up. We came back in that zone, back up. Okay, so even going forward to today, that's still a bullish zone. Will we come back, transact in here, and go back up? Or with Wall Street, are we going to lose this zone and then make it red and then we're selling back down? Okay, but you can see, guys, how literally easy this is. You don't have to overcomplicate yourself with this. Anytime there's a big move and it's already printed, like this move already happened. Okay, so I know a lot of traders say, well, Ron, it already happened. It's easy when it already happened. We can see that. How do we do it when we're live trading? Well, that's how I'm telling you. When you do your analysis, when you're not trading, you can see there's that bullish move. It doesn't take too much effort to get your Fibonacci tool and figure out where exactly 50% is and draw your zone and just put an alert and wait for the volume to come to you, right? So that's how you can do that in a nutshell real quick, okay? Sorry, that was off topic, but anytime you see something like that, get in the habit of doing this. What are my fib settings right here? Okay, these are the fib settings. Again, I have them. I don't normally use them like this. Let me show you how I use them. Okay, this is the real way how I use them. Okay, I have. I like to use the 382. Let me get rid of the 236 to show you how we can identify the point of interest on every single one. Get rid of the 786, get rid of the 168. We don't even need the 0 and the 1. Okay, all I need is this one, white, 0.5 white, and my yellow. So now look at guys, when I place the fib tool now, watch how easy it is. I get my fib tool from that bottom of that move to the top, right there. See those three lines? There it is. There's my 0.5 right there. 0.5. There's the one ratio above and the one ratio below. So there's your zone. Okay. I know it's not the correct way of using your Fibonacci tool, but that's if you're looking for points of interest and points of control. Okay. And there's your zone. If you guys want how I normally have my Fibonacci tool settings, let me just get right back to it. Sorry guys, 1 second. Okay, so what you could do is, this is how I normally do it, is I have the 1, okay, where you can start it. The 236 is a very important Fibonacci ratio. It's for a shallow pullback. It's the first pullback is 236. Okay, so add that. I use a white line to identify it. The next one is the 382. Then we have our psychological 0.5. 0.5 is not a mathematical Fibonacci ratio. It's just the psychological middle from 0 to 1. But it's not a fib. These are fib ratios, 236, 382. The 618 is the most popular one. This is why I use the yellow line or gold, because it's called the golden line. The 618 is like when we buy something and there's a 50% discount on it. 50% is perfect, right in the middle. But if it's 61.8% off, you're getting a little better discount than just 50%. So when we get retracements to the 618, that is the optimal area to either buy or sell, whether it's bullish or bearish. Okay, so I have it marked with a yellow line. And then the 786 again is another critical Fibonacci line, so we can add it, place it white again. That's how I do it. And then just your rotation back to from 0 to 1 or 1 to 0 is just your level. You can add an extension of 1.618 if you like. You can add an extension of 2.618 if you like. I normally just keep it like this. So then, for example, if I'm now placing my Fibonacci on from that move, okay, so let me show you how now it will look the correct way. Placing it from the lowest point to the highest point, right? There it is. So my first retracement, shallow pullback, would be the 236, right there. When it hit the 236, we should have seen a pullback go back up. It wasn't. So that's a shallow pullback we call. That's like getting something at 23.6% off its regular price. It's nice. You get a little discount. Sometimes it's a little bit of a bounce there, but that's what we call a shallow pullback. The next pullback goes down to the 382 right there. So you see when it got to the 382, it was building a little bit of support, and then it came back up where? To the Fibonacci. So you can use these as support and resistance. You know, it helps. If you're a beginner trader, this is a great way to get started. You can see that now it is acting as resistance, the Fibonacci. And look, it also gives you detail that that line is representing 50% of that bearish candle. And see, when you go into the future, it is resistance. No volume closed above there, and therefore continued its next leg down. It pushed, it broke that low. Look at where it came down to, 0.5. That's that psychological midpoint. Then look at when it came all the way right back up. Look at where it came up to. Double top at that exact 236. Resistance. Push back down. Look at how it's trading from the Fibonacci levels, 236 to 382. Come back up to the 236, just bouncing like a basketball. This is scalper's paradise, where you could scalp down. You could scalp it on the way back up. You could scalp it down, scalp it on the way back up. Now you got a bar that closed below with volume, and then look at where we pushed down to, the 0.5. Now you got the exact 50% retracement from up here to 50%. That's a good zone to also look for potential buy or sells. And look at the buy, and look at it. It's having a trouble time breaking above this 236. There's a little false breakout, and it came back down to that 0.5. And look at it, we're trading again right now live at this 236. If it comes deeper, there's our 618. If it goes deeper down into discount, your 786. And then right there is your overall 100% retracement from up there. If it comes all the way down there, that's where we placed our tool of this move. Then you get 100% retracement, okay? So, but these are your optimal areas to look for trades. Does that make sense, guys? And you can see how you can use these all day as support and resistance. Okay, you can even place alerts at these fib levels. Okay, it's that easy, guys. You don't need to overcomplicate trading. This is not a very difficult concept to learn. I'm not teaching about change of characters or market structure shifts or imbalances or this or that. It's just trading from here to there. And when it goes down there, and another cool thing is get your measuring tape and measure from the 382. If it comes up there, it's 50 pips. Okay, so if it comes down there and I buy and it comes to the next Fibonacci, I'm in the money of 30, 40, or 50 pips. I'll do something up there because I know every time it comes up, it has a potential to go back down. If I'm selling, I measure it how we can go. I can measure the next zone. If I buy the 618 and it comes up to the cycle, I'm up 42 pips. If it goes to the next one, it could be an 83 pip move. So you can measure, just like how a carpenter measures when he's working. He's measuring the walls, drywall. He's measuring to put hardwood flooring in, measuring the walls. Same with us. We're tradesmen and tradeswomen here. So we can measure with our measuring tape. We can look for high probable setups and trade accordingly. Okay, trading is a trade, you know, just like any other trade. So we can use our toolbox, just like a construction worker has his toolbox. He has his hammer and some other tools, his tape measure. We also have our tape measure. We have our Fibonacci retracement. We have our trend lines we have our angles, right? You know, when you're cutting, I'm now doing crown molding and doing the trim and casings around. So I'm learning how to cut on angles and everything like that. So when I was telling the guys who I'm working with, who are helping me and teaching me, I do the same stuff when I'm trading. They're like, what do you mean? I go, I'm looking at angles and this and that. And they're like, can you teach me how to trade? I'm like, you guys know how to do this more than me. You guys are doing this on a daily basis. You guys are using rulers, cutting angles, descending triangle, ascending, 45-degree angles when you're cutting and putting joints together. And I'm like, you guys could learn this in 10 minutes. And they're like, they want to give up work right now and learn this. I'm like, no. You guys got to finish what you guys started here at my house first, and then we'll teach you guys how to trade. But it's very similar to any other trade, guys. Okay, so that's why. But I don't know why they don't teach us this in school. That's one thing. I can go to trade school. I can learn how to be a carpenter and things like that. But this type of school, they don't teach us, okay? So you got to get your online education here at SST. Now, what time is it? 8 a.m. So let's get cooking, guys, okay? So we got to get on gold now on the daily, okay? So this is what we have on the daily. Wow, okay? So a lot of consolidating. Oh, man. It's coiling up for maybe a possible all-time high breakout. We'll see, okay? So there was our all-time high right up there. Orange line for Donald Trump's orange face. 3,500 right up there, okay? We came up there August 22nd. The most recent low we had from the all-time high on gold was right here on May 15th, where we hit 3,120. And now you can see we're just consolidating just above 50% of this entire range, okay? We also have good areas of supply that we can see right there. I based it off of those two candles early on in April, and I've been extending this into the future ever since then, and I still am today going into the future. And I can see today we're trading back into this red zone, okay? Do we have an area of demand? I identified this zone back in April in this bullish flag pattern that took us to the all-time high, and I've been monitoring this zone since then. Why? Because I stretch it into the future, okay? And I see that we are moving away from this green zone. There's a higher low. So that's a point of interest right there. How can we not identify that with a yellow line? The next right here, this is a higher low. Look at, we got now bodies to confirm to us. Right over here, we got a body close, body open. Body close, body open. So we're above this green zone. We're making a higher low at 3,273. We're making a higher low at 3,313. And we're coming right back into our all-time high supply zone. Do we also have something below us here? Yes, we have those equal low wicks that were protected from not coming into the green box. So there's a reason why the market does this. It's not just by chance. Some traders think, oh, it was just luck that it came exactly right down there and the same result happened. It wicked back up there. No, this is not luck. This is how markets work, okay? This is called the depth of market. The reason why it didn't break just a couple ticks to create a new lower low in the market was because they're protecting this green zone, and the buyers are placing their orders above here, protecting this from not breaking down. So you can see when it came down there on May 29th, exactly at that price, 3,245, 1 month later when it revisited this area, June 30th, same result. Equal lows, okay? So those are what we call tweezer bottom lows. Start to get in a habit of identifying these on any time frame and learning from them. Do they always hold up? No, but it's good to realize, it's good to acknowledge when you do see it, whether they're tweezer bottom lows or tweezer top highs, okay? They're very important to the structure of the markets. So you can see it came down there, tweezer bottom lows above the green box, and what were the results? We came up with this next uptrend. It came back down. You can see now the bodies are holding support. It came back up. We couldn't break. There's 50% of the red zone. So let's draw another red line right there, 3,400. We might be revisiting this today or sometime this week, okay? Again, that's me just guessing where to place the yellow line. We don't need to guess. Got your Fibonacci tool in that entire red zone. There's, oh man, you can tell Ron hasn't smoked anything this morning. Because I'm spot on guessing these. Normally when I have a joint or two, you'll see I might be off by just a little bit like that, okay? So I'm telling you, Ron is spot on today by figuring out these points of interest. And then I verify it by looking at the number. It's a nice whole psychological number, 3,400, 3,401, 3,402, okay? You're off by 10 or 20 points from a perfect psychological number. So, you know, I'm at 50% of that zone. We got good backup on a psychological number. Life is good. Let's just continue doing our analysis. Now, we have this big bullish move that came back up. Okay, we didn't break for a new high up there. It was a lower high, came back down, came tumbling down the last few weeks. Early August, mid-August, we came down, lower lows. However, it held right there, Wednesday, August 20. We came back up. Here was Friday, Powell, okay? You can see it came back down, back up, came back down, back up. Can we identify 50% of that bullish candle? If I need to draw a yellow line, it would be somewhere right around here. I'm going to go a little higher because now we got bodies that have already tested in that zone, but now they're up here. So you can see that that candle reversed and closed right there. We opened right there, came back down, and we got that nice Powell bullish candle breakout up to here. Can we identify 50% of Powell's candle on Friday? Absolutely. And we traded in it last night. So some of us, some snipers in the group, killed it. We had Serge in the group, hit $14,000 coming out of there. How did he identify it? I'm sure he put the Fibonacci tool from the open to the close, and he identified where 50% of it was, and he patiently waited for it to return back in there, and he got the return, he got the result he was looking for, and he's also taken a couple weeks off of trading now. So congrats, Serge. That was awesome. Okay, so can we also now not just identify 50%, can we make a zone out of it in case we revisit this? Yep, there's our 382 and our 618, what we just talked about. So now we can see exactly how we transacted in here today. The lowest point today is coming out of that zone, and look at the bullish return. Okay, so very bullish today on gold. Okay, can we continue with this momentum? Let's take a look at yesterday's candle and then today. Okay, so sorry, I've already done a little bit of analysis how we came in there, but that's by acknowledging Friday's volume. Okay, so yeah, on earlier of the week we came up, lower high, came back down, closed with a little bit of bearish volume. Where did we close and where did we open today? Right there. Okay, 3,365. So when we initially opened, it was bearish. That was during the futures market, 8 p.m. It just dropped. It dropped, bearish, 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 bearish. See, notice the time when they do it. During the futures market, during Tokyo, there's less volume in the market. They can easily come down there. It's more difficult to do it during like London and New York, but in a futures market, less volume. They came in there. They transacted all of those orders, and look at the response. So we hit our lowest point of the day. We can now see the wick. Okay, I place a purple line. See how it was almost right at the bottom of that green box, and the buyers held it up. They brought it right back up. So that was a big rejection. It hit all those pending orders in that block and filled them. And look at the response. It looks like it's a lot of delta buying volume in that green zone, right? And why? Those were all of those patient buyers that did not get the bullish move on Friday, and they were just patiently waiting. They knew that they had to wait over the weekend. They knew that they had to wait on Monday. They knew that they had to wait on Tuesday. Maybe it didn't return back in there on Tuesday. They'd still be waiting in here on Wednesday, Thursday, Friday. Maybe 1 week it didn't come in here. Maybe they're waiting next week. But that's when it comes in there, guys, you know, sometimes you'll get a good payday when it comes in there. So when I started to realize that, man, my patience and discipline game completely changed when I realized this. So there it is. It came in there. It came back up. Look, it came all the way back to the opening price. We've already engulfed pretty much all of yesterday's bearish volume. And so that's another point of interest right there. Let's draw a yellow line. Why? Because Powell closed there on Friday, and that's where we opened on Monday. And look at the yellow line. It is now representing exactly 50% of our current bullish volume. How do I know that? Because Ron didn't smoke anything this morning, and I can grab my Fibonacci tool from where it opened and where the volume is now, and you see how basically 50% is right there, okay? So we're now the point of control of our current volume is above 50%. So it is technically still bullish, okay? But we do have a rejection above us. So let's continue to follow this bullish volume. We came back up and we took out yesterday's high. Okay, so yesterday was a very important high because it was Monday, start of the week. So we did create a new weekly high today. And look we transacted in the red zone. We came in here. We didn't come all the way back up here. So we came into the red zone. We peeked our head in here, and the sellers are there. So they pushed it right back down. There's our highest point of the day, purple line. We came in there, buyers, and sellers are there saying, we're here. We're at 3,386.87 today. And they've initially absorbed a lot of those buyers. And that's why we have a wick on the candle coming right back down. But we still have bullish volume. Will we come back up during COMEX and continue to fill back up here and maybe push for a new high and start to transact maybe where these bodies are over here? But this yellow line is representing exactly 50% of that red zone above us. Or will the selling pressure that already is engaged come back down and absorb a lot of this buying volume and come back down, maybe flip today's candle and we turn bearish. However, it is still bullish volume. So if you're asking me how we're trending on the daily, it's bullish, because I can look even prior to Powell's speech on Friday, we came up, it came back down, higher low, come through Powell, made that higher high. We pulled back last night perfectly, where we picked up all the orders that were left behind, and now we created a new higher high. So all we got to do now is just follow this volume. If we continue to get to the high, we can break out, but when we get up to this yellow line, we have to respect this yellow line, because sellers could be there to push it back down. However, if we break this yellow line, then we're coming to the top of our red zone, and then look at, guys, how many attempts gold closed above here. May 6th, Tuesday, it closed above. Wednesday, midweek reversal. Wednesday, they dropped it back down. We came back, it closed strong again here on a Friday, June 13th. Over the weekend, reversal, they slammed it back down. We came back above here and closed strong above the red zone on July 22nd, Tuesday, midweek reversal. Wednesday, they slammed it back down. We came in here again. Look, Friday, August 8th, right in the 50%. Over the weekend, they slammed it back down. And we're coming right back maybe into this zone again through Powell's speech, and we picked up those orders. So on the daily, I'm bullish on this, okay? So I'd like to maybe buy pullbacks. If I'm selling, I have to be very careful selling, because I know how strong today's bullish volume is. Let's break down today's daily candle into the 4 hour. Okay, so there's Powell's big push. See how it came all the way back down during the futures market, right into that pocket, and big buyers were pending, came back up. That's where we created our high of the day. So now the volume is just consolidating in here. The last little bit, there's London 4 hour candle coming, and now we got bullish 4 hour volume continue to come up here. So if we look at our wicks, we got equal bottom lows on the 4 hours. Like, look at those wicks. Those are equal. 3367.13. They're equal. We don't have one that's a lower low. They're equal. So they're supporting the depth of market below us by not letting it break down, and we got good volume following through. This hourly 4 hour candle is going to close in 1 hour and 47 minutes. So what we can do now is go into our hourly. Look at the hourly, okay? So we had the big Powell move. We slowly came into it. My bad, I apologize. Powell's move was over here, and this is where we came into it during the futures market. So it dipped all the way down. That's what the lowest bottom of the day. See when it transacted in there, the big bullish move coming right through there. So we did create our lowest point and our highest point during that candle, during 8 p.m. Eastern, the futures market, okay? And since then, it's just been consolidating, very choppy, okay? Pulled back down, came back up. Look at the spin top candles, not the greatest to be trading, but are we gonna build our way back up, or is this gonna be like a double top near the highest point of the day? So here's one top. This is all considered the neckline. We could be coming back up, maybe up there, could be a double top, and then they drop it down. If it closes below there, you know, it could continue to push down. However, we could come up and break for a new high and travel back up, okay? So it is continuously building. We're holding good hourly support at 3371 today. All we got to do is get some hourly volume to close above maybe 3380, and maybe we could drive to the daily high and break out further. Okay, this hourly candle is going to close in 45 minutes. This will represent COMEX and the news, the durable goods during this candle. But what we can do is also break it down into the 5 minutes. And this is our 5 minute look. Okay, so that was the drop right over there coming into the futures market. That was the big 8 p.m. breakout. Okay, so since then, we are holding good 5 minute support. Look where we're holding it. Just see where I'm going to draw a box, a zone right there. Maybe bring it down to the base of my yellow line and show that there's good support holding still here. Every time we're coming down into here, it's bouncing back up. Coming in here, we're bouncing back up. Are we going to come back down into here today? I don't know. But let's see if we get some 5 minute volume closing above in here. We haven't closed there. We missed it. We missed it here. We kind of faked it right up there. Kind of traded in it right now. You can see that there are kind of impulse moves coming in there, no volume closing above here, and they're pushing it down, okay? We are 5 minutes away from COMEX market open, okay? So I'm going to add our daily bar indicator. Oh, shit, I don't have it on this chart. Let me see if I got it. There it is. Okay, so our opening price, remember, and everything was during like 8 p.m. right over here. Okay, so the big move was bearish when we came down, leading into futures. We hit the low of the day. We came back to the opening price. We made that big bullish move. We hit the high of the day right up there, just prior to 9 p.m. And then it's came back down, but we're still holding this bullish volume. Okay. This 0.5 right here, this is part of our SST daily bar indicator. If you go to settings, you can see if you scroll down, we have a Fibonacci level. You can add levels, but it measures it from the entire range, from the bottom of the wick to the highest point. That is telling me that that's exactly 50% of today's entire candle. I can add, if I want, the 382, the 236, the 618, 78. I can add Fibonacci lines to complement this and have them running behind me as well. So that's another advantage. If you have this SST daily indicator, you can also have a fib retracement following you at different levels, okay, if you want to add that on your chart. So the only thing I'm missing is, guys, sorry, is my EMAs. Moving average exponential. Let me just add these. I'm not sure why they're off of my chart. Okay, let me just go to settings and fix them. My 9, I like to use the green line. Okay, so there it is. There's the EMA 9. Let's add a EMA 200. And I like to use a purple line for this one. So let me just add my EMA 200 purple. Input 200. Perfect. Style, let me just make it a little thicker. There we go. Okay. So we've got our EMA 200. We're above it. We're right at our EMA 9. We're 3 minutes away from COMEX market open. We are currently just consolidating right in here, right below the red zone, right above that daily point of interest. If I box in all this 5-minute garbage volume right here, we're just consolidating. Let's see, maybe if it will break down. Remember, if it drops, it could be opportunities to buy pullbacks, okay? If you're selling too, consider that there's a lot of bullish volume behind, okay? If you're selling and it drops down to here, it could go back up. If it drops all the way down to this green box and you're selling, maybe it's a good opportunity to maybe scale out, realize some profit, because you could be selling where buyers are waiting, okay? So just heads up. And if you're already in buys, what we got to look for is maybe we'll get a breakout through here, but we got to also get closing volume above here, because every time it comes up here, it goes back down. Come up, go back down. Here it kind of falls closed above there, and then they've shot it back down. Here we had that impulse right there at 7:45, and they pushed it right back down. So maybe we got to see a 5-minute body actually physically close above there. Maybe we can build off this. Maybe we could get into buys, squeeze all the way back up to the highest point. We could test that out today, okay? Check your spreads, everybody, please. Make sure you guys have the right... Make sure you guys have the right lot sizing. Make sure you guys don't make any mistakes. If we look at our SST Discord over here, let me just go to our signals channel. There was a buy opportunity sent out on gold right over here, just at 6:55 a.m., looking for buys above 3371. If you got in, it moved 50 points, and it also moved 80 pips. So, guys, this is how you can utilize SST's signals and trade ideas to help you guys. So when we're looking at 3371, when I go to my chart now, 3371 is right here, the yellow line. If you're watching it, there was the bullish candles. There was the volume that closed above 3371. There was the pullback. Had you bought right there, you could have placed your stop loss below structure in the green zone protection, and then you got that bullish move where you're up 50 to 80, possibly 100 pips. Awesome. Mickey, you took the signal and within 12 minutes made 40 pips. Congratulations, man. That's perfect, you know. You can utilize these signals and trade ideas as confluence, as an indicator to help you with your levels. So whenever I have my charts ready in levels and I see like a buy above this level, I wait for volume to close above. I look for confirmations. I look for what the patterns that I look for, place my buy, stop loss below, and the rest is history. Then bring your stop loss to break even when you're comfortable, when you're in profit, and then also have some rules when you're in profit to either close partials, trailing stop loss, whatever it is. Okay? Here we go, guys. This is COMEX market open. And also don't forget, in 10 more minutes at 8:30, we have 2 US folders. They're not high impact, but they're still orange folders. And it's US durable good orders month over month, okay? Carlos, welcome. Did the doctor in Turkey told you stop using hats? I didn't go to Turkey for this. I went to Turkey for a vacation. This was done in Kosovo, in Albania. Or you just, no, but I love to show my beautiful curls. Yeah. Everyone's asking me, Ron, did you perm your hair? I'm like, no. This is just bedhead coming out, and this is how it looks. Carlos, don't be jealous, man. Don't be jealous. I feel great. I feel like I'm a teenager again with this hair. It's funny because I have the same hair now as my son. It feels so good to not wear a hat. Wow. Okay, guys, let's concentrate over here. Let's see what's going on. Okay, so we got a bullish candle, breaking out. Just if you're not in a trade, let's just see if it will take out that previous high right up there at 3380. Okay, we can just see if it will take out that high. If it fails to take out that high, then we know it's a lower high and might be coming back inside here. I wasn't bald before. I was just receding a little bit, and I didn't like it, so I was in Europe, 10-day procedure. I said, what the hell, let's do it. What's the worst that could happen? And guys, I'm telling anyone, any gentleman here that is receding or bald, if some of you guys rock that look and you guys love it, but to the others that are, maybe, what's the word I'm looking for? I can't think of the word right now, but maybe if you guys are like wearing a hat, you guys are, go and do this process. Oh my God. You get your confidence back and everything. Carlos, I know you're bald. Wow, Mark, you're 65 with a full head of hair. God bless. Man, that's good. Insecure. That's the word. Thank you. The word is insecure. Yeah. If you're insecure, some people don't care. Some people don't. I have family members that are bald and they love it. I didn't like it, So I always wore a hat and I did it and I love it now. So I recommend it for anyone else that's kind of insecure that wants to do it. It's not a lot of money, $3,000 in Europe. It's a investment in yourself. Yep, we're always investing in the markets. Why don't we invest in ourselves? Yep, his hair is up 2.5%. It's up more than that. It's up like 50% right now. Is your trading better since then? Absolutely. My entire perspective of trading has changed as well. Better hair, better results. It's a new strategy, guys. I didn't want to share the secret, but I guess I have to now. Okay, guys, we got a double top. Okay, so let's just look what's happening here. It came up, one top, rejected back down. Here's our support, the yellow line. It came back, so COMEX opened up. You see what I was saying? Are we going to take out that previous high? It is technically a lower high, and we got volume coming down. So what pattern is this? That looks like one of those M patterns, okay? But in order to complete the M pattern, we got to see maybe closing volume below this neckline. Will it be a false breakout, come down here, get a wick, and go back in? If the volume is still in this consolidated zone, the volume is still in the consolidated zone. If you want to trade inside this zone, you can. However, what we see is now it came down that low. It's a higher low, and now it's coming right back up. So the candle's closing right now in 2 seconds. It's closing as a bearish spin top pin bar candle, you can call it, with it had buyers initially at open, it had sellers, then the buyers brought it right back up, and we closed with some bearish volume. So the next bar now at 825 is coming back down bearish again. So it's still holding up where we have an M top. We still have the volume trading in this consolidated zone. You know, you can speculate where it's going to go, because I can tell you in this zone, we have buyers that are buying. I can tell by the higher lows, higher lows, higher lows. And I can tell you that there's sellers selling. I can tell by the lower highs and lower highs. I can also tell you that the volume is just consolidating in this area, not making a big significant move right now, okay? So we either have to go one way. You got to make a decision. Are you a buyer or a seller? If you are, you can go one way, place your stop loss below, don't over leverage. However, if you're not in a trade like myself, I'm going to continue to watch and see who is more aggressive, who can maybe, if the buyers can close it above here or the sellers can close it below there. We also have in 4 minutes this news coming out of the US, could affect the US dollar, which will impact the way how gold moves, is right here, 8:30. We have our core durable good orders month over month released in 3.5 minutes, and our regular durable goods. Remember, core meaning it's excluding transportation items. Everything else is included in the durable good orders, okay? This will impact US dollar. We will have to watch this. Also, what is this? Trump will impose substantial additional tariffs on all countries with digital taxes. As the President of the United States, I will stand up for countries that attack our incredible American tech companies. Digital taxes, digital services, legislation, and digital markets regulation are all designed to harm or discriminate against American technology. They also outrageously give a complete pass to China's largest tech. So anything Trump is talking about, tech, digital tax, chips, all of that, that will affect possible NASDAQ. So, you know, that's in the news as well. We got to keep that in mind when we're going into Wall Street in just a little bit. Jay, you got dreads longer than your arm. Man, who knows? Maybe I'll come on here and I'll have dreadlocks. We'll see how this stuff grows. Who knows what my hair is going to turn out like. But if I got dreadlocks coming out, man, you guys are going to be in for a big laugh. I had no idea my hair was curly. Even my wife doesn't even recognize me. She's like, who is this guy? She thought I went to the barber and got a perm. I'm like, I don't know. I always had straight wavy hair. I have no idea how I have this, but they take from the back of your hair, like donor hair, and then they implant it, and I guess this is how it grows. For me personally, maybe everyone is different. I don't know. It's all good. Okay, so you see, we're just still inside this zone. It hasn't really made a move yet, okay? So we still got to be patient. We got to wait it out. You can speculate a trade. Like, you can sell with the sellers if you like. You can buy with the buyers. Again, we're going to wait for confirmations. We know that gold is not just going to trade inside here all afternoon or all morning, okay? It's going to maybe possibly make a move to close above and drive a little higher, or it's going to close below here. It could impulsively break as well, okay? And then maybe drop a little further down. Okay? And we're 1 minute away from the news, okay? So we got to pay attention to the news as well. If it's positive for US dollar, we should see gold go down. That's how they're correlated. If it's negative for the US dollar, we should see gold go up, right? Is that always guaranteed to happen like that? No. I've seen positive news affect the US dollar go up, and I've seen gold go up at the same time. And then later on, it reversed down. So there could be fake outs in the market as well. Don't always think everything moves in that exact correlation, because sometimes it doesn't, okay? Here we go into the close. So it's a bearish candle coming down. Remember, will it take out that low? Will it close near low? With news, it could open ignited and just drop down, okay? That could happen because they're going to drop some high impact news now. Here's the close. Okay, so right there, just a drop. Let's see if it picks up a wick and comes back in. Okay, so it took out that low. It's got a wick now. Positive news, I believe. Still pending. I'm watching the US dollar is moving bullish. Okay, so will it retest 50% of that bearish candle? You know, just looking at the point of control of that candle. Okay, so it came, no volume has closed below as of yet. It just impulsively broke down. We see it took out that previous low, came down, and came right back in to this zone. So it could continue to push down, but maybe we got to officially wait for a bar to close below. Because if we're just selling right now, we could, but we're going in on an impulse, okay? We have no confirmation that that 5-minute body has closed below there. So if you want to wait it out, I would suggest waiting another 4 minutes to verify where it officially closes, unless you like how it's breaking down and want to go into a sell, okay? I'm just waiting to see what the actual news is when they release it. Okay, so durable goods, positive, 1.1%. That's a big increase from the forecast, okay? That's like 5 times more, okay? So 5x more, that's good. Also came in the durable goods, negative 9.4 previous. They were forecasting negative 3.8. That's also good, negative 2.8. We're getting closer to the 0, you know, when we're moving to the left. Those are good numbers for the US durable goods. So came out pretty positive. Now let's see how it will affect gold when this bar closes, okay? Okay, and US 30 is moving up with the news. Same with NASDAQ is moving up with the news, okay? We'll wait for this body to close as well on US 30 and NASDAQ, okay? Let's just continue to watch this gold close. 3 more minutes to go. Carlos, you're silly, man. Okay, so a good move on US 30 and NASDAQ, pushing up bullish. We'll verify, will this be a nice body that can close above this structure? It looks like a double bottom, came down, back up neckline, second bottom, came up. Now we're breaking out. Let's see if we can get some physical volume close above there for NASDAQ. Maybe to continue to push to the upside with US 30. Good for the US stock markets. But we're still following this gold body to close. It broke, so it did create that lower low, but it just dropped, came back in. So we're trading right back in this consolidated zone. We're still below 50% of that previous bearish candle. Maybe that's a good little pullback on gold, and maybe we'll continue going in a bullish direction. Okay, so now it's a hammer candle transacting at 50% of that previous bearish candle. Okay, I'm going to zoom in now so we can see together. 1 more minute to go into the close. Okay, so was this a fake out down here? They took out the low, maybe swept some liquidity down there. It could possibly come back down, but I don't see a closing candle down in there. So now we're moving back up bullish. We're above 50% of that previous bearish candle. Is this candle going to completely engulf that previous bearish candle and maybe continue to move upwards? I'm just going to get rid of these arrows, guys, just so we can focus on the candlestick. Okay, and 30 seconds to go. We'll figure out where it will close. So we have a financial juice. Here's the US durable goods actual coming in. Here's the article. If you guys want to, if you have financial juice, you can click on that. It'll take you to the government census on the manufacturing index over there. Okay, and here's the close on this candle. So we are officially closing above 50%. We just did, okay? So will it continue to hold? Let's see if it will pull back, catch a wick, and go back up. So we're testing now 50% of that previous bullish candle. If this candle can flip, maybe we'll continue to move bullish in the zone and maybe continue to possibly break out of here. However, this candle opened bearish ignited and pushing down. Okay, so it could come all the way back down and close below here and start to sell off. Okay, so right now it came down to about 50% and it's still holding, but we have not flipped the candle bullish as of yet. It still has that bearish ignited head. Okay, so there's the actual flip on the candle. Okay, let's see if it will pull back just a little bit. If it can just pull back one more time, just one more time pull back to get some more volume, then maybe it will shoot back up, okay? Okay, so here's the pullback. Okay, so now it's coming back down bearish. Okay, we're still transacting in this zone, right? So it's hasn't made like a big move. Prior, even if there was no news, like we're still in this, we're going up, down, coming up, down, still trading inside here. So again, we got to focus maybe on if sellers bring it back down, will they officially close it below here and then have caused the drop? We got a lower high, lower high, lower high. Will this be a bearish engulfing candle, engulf those buyers, or are we just going to continue to consolidate in this range? Remember, we got buyers and sellers both in here. Okay, and that was positive news for the US dollar. So if it continues to be positive for the US dollar, then maybe correlation wise, we should see gold maybe selling off a little bit. But while it's in this zone, if you don't want to trade inside here, let's not trade inside here. Let's wait for something to happen above or below the zone. I know it's boring. It gets boring watching stuff. Pasindu, you won $284. Congratulations, man. That's a big, big return. Guys, we have 430 viewers on YouTube. Thank you guys so much. If you guys can hit the like button, we do appreciate it. Maybe we can get up to 500 viewers on today's call. That would be amazing for us at SST. And also, if you guys can hit the subscribe button sometime on today's call, not now, but if you guys can hit that subscribe button when you guys have a moment, thank you guys so much. We do appreciate it. Amazing, guys. You guys are really, really, it makes it worthwhile doing this on a daily basis when you get 300, 400, 500 viewers. One day, hopefully we can have 1,000 viewers learning with us, earning with us, cracking some jokes with us, having some fun, making fun of Ron's hair. That's all cool. Don't worry, you can make fun of your old uncle. It doesn't matter. I'm all good, guys. But if you guys have a barbecue, you guys better invite me, okay? Your uncle likes to eat. I like to eat and smoke. So anytime you guys have a barbecue, make sure I'm invited. And Dave. Dave likes to eat too. I'm having a big, big, big barbecue. Maybe the second week of September. If you guys are around my neighborhood, you guys are welcome. I'm having a lot of family over. I'm going to finish these renovations and have a big, big lamb roast in the backyard. Everyone's welcome. You guys are all family. Just bring your appetites. Oh, Sherry, you're on a diet? Yeah, there's going to be a lot of food. There's going to be a lot of food. A lot of sweets. A lot. Maybe that day you can have one cheat meal, Sherry. Diet Monday to Friday, and then that Saturday you're gonna get a plate. You're gonna get a plate full of food. Trader channel, why you don't trade where everyone can see how I'm trading my lots like some others? Maybe I'm different than some others. Maybe I don't want to show that. Maybe I'm a little private, My wife wouldn't like that. My wife is my financial advisor. She'll kick my ass. You answer to my wife.
If I start showing my financials and my accounts online for the world to see, are you kidding me? Hell no. I'm not dealing with that. I'm not dealing with those headaches. No way. I'm broke, guys. I'm living paycheck to paycheck, okay? I'll admit it. Don't worry about financials, okay? I'll tell you one thing, okay? One thing. Let your uncle give you a little bit of advice here, okay? I used to, tell all my friends and this and that how much money I was making, okay? And I'm going to tell you, nothing positive came out of that. Why? I lost all of those friends and family members, okay? Let me tell you why, okay? And maybe some of you guys have gone through the same shit like me. Everyone, when you know that you can make some money, everyone is going to come. Family and friends say, hey, Ron, can I borrow $500? I'll pay you back. Ron, can I borrow $1,000? I'm in a difficult time right now. I'll pay you back. I have a big heart, and I don't care who it is. Anyone that asks me for money, I will always give them the money. 1,000, 2,000, 5,000, doesn't matter to me. Because I always trusted them that they were going to give me that money back. And I no longer talk to those people, family and friends. And I'll tell you why. Because, after one time I'll ask, like if they say I'll pay you back the $1,000, I get paid in the next month, I'll give you it. Okay, no worries. I'm not harassing you to get my money back. No worries. But when that month comes, I'll message you and say, hey, you told me 1 month, that month came up, do you have my money? And they say, then the excuses start piling in. Oh, I'm in a tough time right now, I'll pay you back next month. As soon as I hear that, I know they're full of shit. I'm not going to see ever again my money. And then those people will stop contacting you. They stop texting me. I don't text them anymore because I write them out of my life. And I've lost a lot of friends in high school growing up. I've lost even my close family members, like cousins like that, where they'll no longer message me because they know they owe me some money, and I'm not a person that's going to go and harass them to get my money back. I just write them off. So it's better I don't show anyone how much money I'm making. It's better to tell people when they ask, Ron, how much money you have? I tell them I'm broke. I tell them I'm living paycheck to paycheck. It's less headaches, no one bothers you, and life is good, okay? I'll tell you one thing about your financials. Keep it personal with you, your wife, your kids, and your family. No one else needs to know how much money you're making, how much money you're losing. That's your business, okay? My business is here to educate on candlesticks. My business is not here to show off how much money I have, how much this or that. If you want that, like you said, there's other traders that show that. Go on their channel. Go learn from them. Go learn how much money they have. Go harass them for money and things like that. I don't show that shit. I was on here showing how much money I made, and then someone said to me, well, Ron, why are you showing off how much money you're making? And I'm like, I'm not trying to show off how much money I'm making. I'm just trying to show you when, but I don't know. That's just me personally. Whether you want to unsubscribe. I don't really care about that. I'm not here to tell you guys how much money I have, what type of cars I drive, how much rental properties I have, this, that. That's irrelevant. There's other channels for that. You can go ahead on those channels. I'm here about principle, about educating. You guys judge me on my education of price action, on how we're in here constantly with you guys, helping you guys out trading. That's what I want to be judged on. I don't want to be judged on how much materialistic things I have. I don't give a shit about that. I'll tell you another thing. You got your uncle going now on advice. You know how I started to build wealth, guys? When I stopped giving a shit about materialistic things. I've had every single car you can imagine when I was younger, and they all depreciated in value, and I lost money. And it was always keeping up with the Joneses. I was always had to, if I get a nice car, and then I had to get another one and keep spending money. If I bought a house, I had to get a bigger house than someone. And I figured out over the years, when I was young, I was stupid doing that. I always, it didn't matter, whatever I had. If I had something good, a nice car, I always had to get something more and more and more and spend more money. And I was just digging myself in a hole to impress people. Now I don't give a shit about that. I'm descaling everything in my life. I'm getting rid of all my cars. I'm getting rid of things. I don't want that anymore. And that's how you build wealth. The less you have, the more wealthy you become. If you want to play that game with keep buying new fancy stuff, you're going to get in that vicious cycle, just like trading. You're going to get in that loop and you're never going to get out of it. Because even if you have a nice Ferrari, you're not going to be happy because you got to buy a Lamborghini. When you get a nice, beautiful Lamborghini, then it's not enough for you because you got to get the Bugatti or a McLaren. When you have a nice $1 million home, it's not enough because your neighbor has a pool, and then you got to get a pool, and you got to keep putting yourself in debt and keep playing this game. I'm 43 years old. I don't give a fuck about cars anymore. I don't give a shit about those things. They don't mean nothing to me anymore. So that's true advice. If you're sitting with me and we're having a smoke and we're having a drink together, I'm telling you that shit as a cousin, as a brother, as an uncle. I'm telling my kids this shit too when they grow up. I've learned my lessons over the years. Okay, I'm not 20 years old anymore. I'm not here to show off how much money I have, how much this, how much cars I drive, or this or that. Those days are done. If I was 20, it would be a different story. Sorry guys, I'm 43 years old. My best investment was my hair in the last few years. I'll show that off. You guys can see it. Look at my hair. But guys, that's for real, you know. I don't play games anymore. You guys might play games, I don't. Just like trading, you get in that vicious cycle, you can't get out of it, okay? Guys, life is about decreasing your things, paying off your debt. That's when you're financially free. And just enjoy life. Whether you got a beater as a car and it gets you to where you got to go every day, enjoy it. Get to where you got to go, you know. Yes, I know it's nice to have a nice car, but just get something that is nice for you, you know. Ford Focus, amazing cars, Omar. Ford Focus. I had one of those back in the day. I love it. Sherry, pay off all your credit cards. That's right. Yeah. Okay, see gold? It's basically doing nothing. We're still in this accumulated phase. So you got Ron to do a little rant while we're in that little consolidation. Again, US 30 is still building. We're going to get ready for this come Wall Street time. NASDAQ is continuing to build here. Camila, you know, I understand you too. Yeah. Your grandfather, who managed to save some money during his working years, has always saved every penny, keeping it in his account. By now, most of the savings has been consumed by inflation. I understand that. Yep. Every time you leave your money in a bank account, it's losing money over time. Like if you have $100,000 and you leave it in your bank account, the bank will give you maybe 1 or 2% interest on that $100,000. You might at the end of the year have, let's say, $102,000 with earned interest. I know in Canada here, you got to claim your interest as income tax. They're going to tax you about 30% is the marginal rate on it. And then with inflation and cost of living going up, your $101,000 that you're left with is now going to down to $99,000, $98,000 over the years. It's just depreciating in value. So that's why it's good to put it in high income investment funds, maybe like dividend funds, so you get a bigger return on your money, or invest it in other avenues like real estate. Real estate appreciates over time more than like a bank account can give you. But no, I completely agree with you on that aspect. OJ Trades, you're from Michigan? I come to Michigan often. I was just over there in Detroit. We went to Sarnia, to the Port Huron, and I came into Detroit. I have relatives that live in Michigan. Taxes are crazy in Canada. Yes, they are. They're ridiculous over here. I have a villa in southern Albania. That's where I'm going to be visiting or spending most of my time in the near future. As soon as my kids get a little older, you won't see Ron in Canada too much longer. I'll be right on the ocean. Okay, guys, like the markets are doing nothing right now. I know it sucks, but I'm still watching this. Okay, so gold is building back up, lower high, coming back down. We still have no volume closing above here and no volume closing below here. It's still in this accumulation phase. Maybe we will be starting to push at some point. Now it's going to come back down and try down here. Again, this candle just opened up now. 4 minutes and a half to go on it. It opened ignited bearish and pushing down. Wow, lots of Michigan. You're from Hamtramck? Oh, nice. J Trades, your best friend is Albanian and Bosnian? Kakosi. That's amazing. We should get together. Maybe we should have a Michigan meet. You guys come over to Canada. You guys will get more. For me to come into US, our Canadian dollar is shit. Danny Saranda, yeah. Yeah. How do you know that? It's beautiful there. It's gorgeous. I'm waiting for this bar to close. I'm waiting for this bar to close in 3.5 minutes. It looks like it wants to push down. Okay, so you know, we can see from the top. It is technically, you know, we are descending. We are pushing down. So this is like a descending triangle coming down. Can we get that closing volume to confirm? Every time we come down here, it goes back up. Came down there, went back up. Came down, again, back up. Came down again. It's going back up. Durs, wow, how do you guys know all about the Albanian coast? That's impressive. Dibosek, you're from Croatia. Kako si? We were in Dubrovnik and my neighbor's from Split, Croatia. Beautiful. Dubrovnik is beautiful. If you guys haven't been in Croatia, wow, go to Dubrovnik. It's a little expensive, but it's beautiful. Sarah, you just got back from Split? Really? Wow. It's so nice there. Okay, so this candle's closing in 2 minutes, guys. Vermi, Armandi, yeah. Armandi, underscore the Green Coast. I go northern Albania too, Shëngjin, Velipoja, beautiful. Adriatic Sea is very, very beautiful, guys. Come to Cooks and Prizren. I've been, Trader Channel, I've been. I was there last year, last summer. Mildred, I'd love to come to Kenya, Yemen. Yeah. There's so many places around the world I want to visit. It's just time, guys. It's time. It's not having enough time. Especially with the kids growing up. Okay, so you see, guys, we came all the way down there again. It reversed. We got this bearish bar. We're going to close in 60 seconds. Are they going to bring it back down? Oh, man, like gold is just trading sideways. But, guys, just be patient. We got to understand, it's not just going to trade in here all day today. It eventually will make a move either to the upside, if we continue with this building higher lows with this nice big bullish momentum we have behind us on this daily candle, or we might get a pullback coming down here. Even if we look for maybe a possible selling opportunity, if it does break down from here to the yellow line, it's about 40 to 50 pips. Not bad to grab a few pips coming down, but then we have to respect this yellow line or the 200 EMA if we do go into sell. Now it's coming down with that selling volume. Now let's watch. Will it physically close below here? I'm going to continue to track 50% of this volume. Here's the close, okay? Will they take out that low? Will it close near the low? Are we going to close right at the low? Okay, then we're looking for a possible retest, okay? So we actually now I'm going a little bit above, a little bit below there. Here's the move. We did close below. Ignited bar just pushing down. So it's got no wick. So it is just dropping off of that momentum of that candle. If we're going to wait for a pullback, we got to wait in this zone. This yellow line, the 9 EMA might be following in there. Maybe it will reverse back up at some point. Okay, it's not doing it right now. This is an ignited bar drop. Okay, so for those technical traders that understand, we closed right at the lowest point of that candle, and the next candle opened, ignited, and just dropped. There's no wick to fill. It's just dropping, right? But for those patient traders that are waiting for that pullback to sell that location, we got to continue to wait it out. It hasn't came back to us yet, okay? This is just, if you went in either on that candle or as soon as that candle opened and you hit the sell button, that's you. There's other traders that are waiting for this potential retest, okay? So we have to wait it out. Will it come back up this candle? Maybe the 10 minutes from now, maybe 15 minutes from now, but at least we have confirmation that we had a bar that closed below, okay? So that's why I made this zone red, okay? So when we say we're waiting for a possible pullback, that's what we're doing. We're waiting for a pullback. This candle just went without us, okay? It happens unless you know how to scalp that candle. Okay, so that is just pushing down, right? So that candle came down. It closed at the lowest point, no wick. This is a transitional candle that just opened with that momentum, ignited bearish, just opened and dropped, okay? So the only other way how to trade these is you got to go to the 1 minutes and watch that. Or if you're on the 5s, unfortunately, there's no pullback yet. It sucks, believe me, because I love trading those candles right there. But I'm trying to be patient. I'm trying to be disciplined. But that candle alone is 25 pips, okay? So now it came to that 200 EMA. It's got a little bit of a wick. Will it come back up? Will it continue to go down? Maybe we could potentially look to buy, at this yellow line. Okay? Doesn't always have to be, you got to go with a sell. Gwendolyn, you call all of that sell? Wow. Congratulations. Nice one. 1 minute was a clear break of structure. Yeah, that's what I'm saying. You got to either go down to 3 minute was a 3-bar play that it just impulsively broke down. 1 minute, there was the 1 minute candle that did close below. Had you, again, got in on the next 1 minute candle, I don't know if you did or didn't, okay? But I don't like speaking hypotheticals. I'm waiting for a pullback. It hasn't came in yet. Okay, so what's going on with NASDAQ? And again, NASDAQ and US 30 continuing, consolidating in here. We're about 30 minutes away from Wall Street. We'll concentrate on that as we get closer to Wall Street. But let's just see gold here. Okay, so big breakdown. This is coming from higher time frame. So this is a big 15-minute drop coming down. We're going into now 9 a.m. So a new hourly candle will be coming down. Look at the hourly candle. Okay, so we have a bearish engulfing hourly candle. Will it completely engulf all of 7 a.m.'s bullish volume and close below here? We could be continuing to push down on gold, okay? And we're already decreasing the size of our daily bar indicator, okay? So look at it. This is all the daily volume we still have left that's bullish, okay? This could really start to come down. So again, if we're waiting for a pullback sell, we're waiting around here, 3,376. It would have been a great impulse entry, okay? But sometimes, you gotta go with intuition. That's what I mean, guys. Studying these candlesticks sometimes will help you. That candle opened bearish, ignited, pushed all the way down, closed at 99.9% near the lowest point. I can see a tiny, tiny wick on there. And the next candle opened just bearish, ignited, and just dropped. There's no wick to fill. So that's just getting that fill. Some traders understand that and trade these. But for those traders that are waiting for that pullback to retest, you can clearly see it has not pulled back. That doesn't mean that we just now take a sell at the lowest point of this candle. If you're patiently waiting for a pullback, you got to wait. Okay, that's the nature of trading. It's patience and discipline. Will it come back up here in the next candle or the next 30 minutes? Maybe Wall Street. Maybe during Wall Street it comes back up here and we're looking for a sell there. Sometimes trades get away from us. You know, if we're continuing to mark where's 50% of this bearish candle, it's right about there. So if it comes back up, again, it's got to get through this point of control of this candle as well before it can even retest up here. This is now 9 a.m. opening up, okay? So a new hourly candle. They dropped it all the way down to our daily point of interest. This could be an opportunity if you're looking to buy a pullback. You could be looking to buy here. But it's you're buying against a lot of bearish pressure here. So maybe we got to watch and see. Will it build here? Will it come back up? Will it come back down? Maybe a double bottom here, then go back up. Then when it comes up, you know, we could be looking for that selling point there. So again, I'm just waiting it out here. Okay, so there it came back up. You know, just below 50%. We have our 200 EMA right there that it just hit, and now it's turning into a bearish pin bar. Could definitely continue to push even further down. Okay, buying opportunity could be the green box. The bigger green box is a great opportunity to look for buys if it gets down there. Okay, because we can look now in the past when gold came in the green box, it went right back up. When it came right down there in the green box, it went right back up. What if it's coming all the way back down again in this green box? I could be saying the same thing. It could be going back up. Okay, so we got a good response now, coming right back up. Okay, so now it's transacting around 50%. Still a lot of time left on this candle, 3 minutes. What if it comes all the way back up to retest our zone, okay, up here? Okay, what other news do we have today? We got Wall Street coming up and some consumer confidence after 10 a.m. on today's news. Guys, we do have the free Telegram channel available for everybody. You know, make sure on YouTube you guys are subscribed to that. We'll have giveaways, promos, and all kinds of stuff on there. So it did come back up. They're pushing it back down. Get ready. Maybe we can continue selling down with this momentum now, okay? Because maybe it will not come all the way and trade in that red zone. Maybe now they've pinned it down, okay? So 2 more minutes to go. They've rejected the move. If we get some volume closing below here, we could continue. This is a shooting star candle. Some traders like to take this candle as well on a sell. Or we just wait for the volume to confirm if it can close below this yellow line. But we see it come up bullish, bullish, bullish. Right up there, got rejected back down. Okay, so if we close below here, it could have its next leg pushing all the way back down to this green zone. Ephraim, good morning. Welcome. Thanks for joining, brother. Did we just witness equal bottom lows on those 5-minute candles right there? Okay, let's keep in mind equal bottom lows. If volume closes above the yellow line, it could get back above our daily point of interest and maybe move up bullish. But let's see if they'll break those equal bottom lows. Right now, they're still holding. Okay, so we've spotted them so far. Will they continue to hold? It's coming down there again, testing them. Will we see a break for a new lower low? Or they continue to stay equal? Last 30 seconds. Okay, so they did technically break it right there. I can see the black volume below there. So it is a new lower low in the market. So they broke it. So those equal bottom lows it just lasted just for a few seconds and they broke it. Yeah, the M pattern played out. Okay, yeah. I know I didn't take the trade because I was waiting for that pullback, but there's the M pattern where it did come up. There's the neckline, second top, there's the drop, and there's breakdown, okay? So just pattern recognition, when you recognize those patterns. Okay, so it opened bullish ignited, came right back, retested that yellow line back down. So let's see if this candle builds. It might be an opportunity to look for maybe to buy it back up. Still holding the volume from today's daily candle. Okay, so it could be looking, I might buy this. Okay, I'm gonna go in a buy. I'm gonna place my stop loss, just below that wick, the last low, and I'm looking for it to maybe return back up to here. I'm just looking to buy. I see it significantly drop down. See a nice big bullish ignited candle open. We're below this yellow line, so it broke that daily point of interest. Maybe 5-minute volume can come back and build above here, close above, maybe build this. I'm going to test out a buy. Remember, bias was on the daily candle to see maybe if it can continue to buy up with this. So maybe could drive back up to maybe this red zone. So I'm just testing out a buy here on gold, guys. Want to see if we can continue to build and maybe close above here. Stay above maybe this supporting level right over here. So like the reason here why I have this red line is there was base of support right there. It broke down, came into the green box, came back up, closed above. So, just I want to see if this zone right over here where those wicks are can still hold some 5-minute green volume right there. See how I have the zone? Okay. So I want to see if they'll build a higher low. Remember this indicator 0.5 is 50% of today's range of the volume. So I like to buy just above it. Got a good bullish bar, but I got to watch where it closes, okay? Excuse me. 2.5 more minutes to go. Maybe we'll come back up, maybe come back down, maybe a double bottom to retrace back up to, retest this level that it had that M pattern that broke down, just to maybe come back up to here, maybe go up 30, 40 pips just on a return coming back up. But it might have to build, might have to also build. Okay, and my stop loss is just below, right here, this last low that came down in here. My stop is just below there. Two more minutes to go. Got a good bullish candle, but we still have, a lot of room. We got a lot of work to do to get it back above here. But if we can get volume eventually closing above 50% of this candle, maybe we can build to get up to the second half. But every time we come up, they're pushing it back down with a lower high. So, one thing, one candle by candle. We got to see if this candle can engulf the previous candle, number one. And then can we build off of that to get up here, okay? Can one candle do it all? Yes, it can. But, we got to take it candle by candle. First thing is we got to engulf this previous bearish bar, which we're doing right now. But there's a lot of time left on the candle, 90 seconds. Sellers could continue to bring this right back down, okay? So it's nice. We have one bullish ignited candle forming, but we got to close with some volume. I want to see if the buyers can close it back above this yellow line, and we can build this daily point of interest again with 5-minute volume to retrace back up to here. I am counter trading this bearish move, but I'm also trading with the support of the daily higher time frame candle. The big bullish move right here. You see that wick right there? Those are those equal bottom lows. That's why I have my stop loss below there. And I'm seeing if this can build as a higher low block on the 5 minutes. Okay, so hopefully I broke that down why I'm in a buy. But now we got to play it out and see what happens here. Okay, and here's the close. 10 more seconds. Let's watch. Will it completely engulf that previous bearish black bar right here? Or will they just bring it down the last second? Okay. So look at where it might close, right at where it opened. Or, okay, we got a little tiny bit of blue volume. So that's technically a bullish engulfing candle. We engulfed the previous bar. We still have a lot of bearish bars behind us, okay? So if it needs to come back down, let's see if we can make a higher low or like a double bottom here at this green box. It opened bearish coming down. So I'd like to see right here where my cursor is. Can we pick up a wick right here at the yellow line? That's that daily point of interest. Right here where my cursor is. I'd like to see if the 5-minute support can build right here at this daily yellow line. Okay, it didn't. So sellers are breaking it down. It came a little deeper down. We got our wick. Now can we flip this bearish candle back up to bullish, fill our previous wick, and then see if we can get back up to 50% of that big bearish bar right over there. Okay, so we got to watch and see if it will continue to build here. That big bearish candle is coming down. It's engulfing everything, on our previous bullish candle. So now we're testing the green zone down in here. Okay, we're currently, technically, we're holding it right now. Good wick. Okay, so it had to come down a little deeper down. We're still getting that support there. So now can we flip our candle and then see if we can continue to drive back up? Can take a look at NASDAQ and US 30. So just keep an eye on also US 30. It's reaching that red zone up there, okay? That's where that hourly, remember we got that hourly white line from the 4-hour. That's that 4-hour point of control. Our 200 EMA is there as well. So selling pressure could be there to push this thing back down. However, if it kind of flips above and goes, we could continue to drive bullish on US 30 going into Wall Street, okay? So with gold, we have a nice bullish pin bar hammer candle that formed, but right there, you see that red line, 50% of that bearish candle, and our 9 and our 200 are right around there. So, this could be where our neckline is. If it goes up there, it could be possibly like 20 pips, but we got to also understand that that's 50% of that selling candle. 9 EMA and 200 EMA are at this location. So there could be like a minor block right there of resistance that we might need to break out of. However, it could come up there and go back down. That could be where our neckline is, where it comes up and it goes back down. And then maybe we got to see for another bigger double bottom, get above there, maybe break, make that red line into support, and then get back up to that red zone. Okay, that's a possible pathway. And we're about 18 minutes away from Wall Street market open. Okay, and 2 more minutes left on the candle. So you guys see how it came back down and retested the green zone? Okay, so where did I get that green zone? Simple. Just looking at behind the charts right there, I see that wick and that wick previously retested. I came down to the red line, and that's how I got that buy out of there. Okay, but let's see how and where it will close. Because again, we're going against these 3 bars. This 5-minute bar, 5-minute bar, that 15-minute push down. We're countering that move, but I'm trying to buy with the overall higher time frame with the daily candle, hitting that equal bottom lows, green box holding. We built some support right there, so I want to see if we can continue to build just to retest back up there. However, that's resistance right there, so it could come back down, and we got to see if we can build our second bottom. Second bottom traditionally has more volume and the bigger, stronger leg. Okay, so we're going to close now in 1 minute. Are we going to get up to that red line, retest that? Maybe if we can physically close above it, we could turn that red line into support momentarily on the next candle and get support off of it and continue to drive back up. Okay, but it's going to be interesting how it closes. And the last 30 seconds are critical to watch. It shows who has momentum going into the close. Will the buyers close it strong going into the close, or will sellers come in and just shoot this thing right back down going into the close, and that could carry the momentum going into the next candle. So right now, sellers are pushing down our buying volume. It's turning into an indecision candle now, spin top with a little bit of blue volume. So we kind of lost a majority of our blue volume going into the close. Buyers just came in last second. So we didn't close near the high. We came back down. We still relatively closed above our opening price just by a little bit. That's a bullish spin top with a little bit of bullish volume. So can we carry forward into the next candle by moving back up and testing that high? Or are sellers going to step in now and push it back down to test either a higher low at this yellow line? So see how the yellow line is still static. I haven't changed the yellow line right there. We're retesting the yellow line. And did it get a wick? It initially just did. Can we flip it back up? Are we holding this daily point of interest as support, or are sellers going to break it back down and come down? So you see how it retested that yellow line and we're still holding it. So we got volume closing above on the 5 minutes, and our yellow line daily point of interest is holding as short-term 5-minute support currently. But we got to kind of flip the candle back up bullish and ask to trade back up in here. So you see how we flip the candle with the retest of the daily point of interest. So guys, everything we talk about on a top-down analysis, why we utilize these yellow lines and purple lines and white lines, now you see how they react on the 5 minutes, okay? So you see how it came down? That was a scary bearish candle, but we picked up our support exactly where we needed to get it, at that daily point of interest. So now all we need is buyers to continue to ask to trade around 3373 to create a new higher high so we can continue to move forward. But this is where trading at a critical area. This is if I find 50% of this big bearish bar from the open to the close, we're trading right at it. There's 50%, and the bearish point of control of that candle is what's keeping us down right now. It's right there. So you see how we traded again right into it there, back down. We came back in right into it, back down. So we're struggling right there to break above. Okay, so that's our neckline. That's where the resistance is. So it wants to come back down. Sellers are pushing it back down, but we continue to build our depth of market. We're still holding our daily point of interest. If this doesn't hold, it's going to come back down to our green box, and we'll see if our green zone down here is building the depth of market to pick up the move. So we're right back down. You see how now the sellers are strong? They broke that. So can we get a higher low or the green box holding? If it breaks, then you can tell how strong the selling pressure still is. It'll break this and go for that new lower low. And guys, I don't know if I'll still be in this trade come Wall Street in the next 13 minutes, but regardless, if I'm still in it, my stop loss is below here. I'm going to have to switch over to US 30 and we'll watch NASDAQ, but whether this thing is going in profit or in drawdown, I'll verbally let you guys know, but I'm telling you guys, my stop loss is below here, below this block. This green zone is still holding. Can we get volume continue to build up here? You know, this trade is taking a long time to develop, but just like this one, took a long time to develop, and then they finally broke down. Maybe it needs to develop here for it to continue to break through here and continue to go higher, okay? Okay, so again, look, we came down, technically higher low, We got volume back above that yellow line. Now we got to see how it's going to close in the next 50 seconds. So that last 30 seconds is going to be critical to see, can we flip the candle back up bullish? Can we close near the high of this candle? Or are sellers stepping back in and pushing it right back down, which they are. Okay, so lots of still selling pressure above here. See, when it comes down, it reloads. But it's going to be how it officially closes. 30 seconds. This is like in basketball, the 24-second shot clock. We're watching now this last possession. Who's going to close it out? Who's going to control this candle? So if our sellers are stepping back in, buyers are bringing it back up, or you still have that bearish volume, okay? So if they close it below that yellow line, it's a high probability that the next candle would open bearish and coming down. But you see how the buyers are continuing to ask into the close? So here's the close. 1, 0, okay, we close with buyers bringing it back up. Can we get a bullish ignited bar? No, it opened bearish ignited, so they're dropping it back down. Again, can we pick up a quick wick and flip this candle and continue to drive? We're still got technical volume above that yellow line. It did break, but no volume has closed below. So we still have our buyers interested, asking to trade up here. All we got to get is our sellers to get exhausted and tired of selling, but continue to ask up here. And we know that our sellers have their stop losses above here. So if we can continue to ask to trade up here, maybe we can technically break out and squeeze a little bit of sellers, but we still have this bearish point of control that we still cannot break above. So it came up, but we got a lower high, lower high, lower high, and now we have that 9 EMA crossing below the 200. So this is that bearish crossover that now brings that volume, that bearish volume, to continue to come down, and we are technically building off the bottom with these higher lows, but we're not getting good closing volume. So sellers are stepping in, coming back down. Will this green box hold for like a fifth time here? Or is it going to officially break and drop for a new lower low? Then if we lose this supporting area, then you can tell how strong the sellers still are, okay? Again, but we're in an accumulation phase, just like we were here. Here, buyers were accumulating, sellers were accumulating. Buyers were accumulating, sellers. Buyers, sellers redistributed to the downside. Now we've got buyers accumulating, sellers accumulating. Buyers are accumulating. Who is going to redistribute the volume? It's either going to be redistributed back up to the upside, that's what I'm hoping for in a buy, or these sellers are going to redistribute it back to the downside, down in here. Okay, and unfortunately we caught an area of consolidation where the volume is just continuing to consolidate inside here. $50 pips is too wide of a stop loss? Maybe. It all depends. What lot size are you using? If you don't want to use 50 pip stop loss, then go right below that green zone. Okay, you're below that green zone. How much are you risking just below that zone from here to there? You're risking 20 pips. But they could stop you out, catch a wick, and go back up. Okay, even if you were just to place it below there, what's your stop loss at? You're about 25 to 30 pips, okay? I'm just being below that previous low point right there, okay? I've already calculated my lot size. I've already calculated if I get stopped out at 50 pips, how much I'm losing. I'm not risking my entire account. I'm just risking 0.2%. It's not bad. If I get stopped out, I get stopped out. Guys, I have a furniture delivery coming to my house in just a couple minutes. Oh my God, they're going to come right when Wall Street market opens. Okay, guys, if I just step out for like 5-10 minutes while they come, I got to open the door and tell them where to put the furniture. I'll come right back, guys. Don't leave me. But I do just got to open the door for them. They're almost on their way. I have a live tracker. Okay, so we're coming back down there. Again, we got another good wick. Okay, closing in 53 seconds. Can we ask to trade back above here and create that higher high? Or a seller's going to bring this down? Again, the trade is right back to break even. If you don't like the trade going into like an exchange open or a market open, or you don't like how it is, you can close the trade right now. No win, no loss, or reduce your risk right now. If you don't like the setup, that's what you can do also in trading, guys. If you've given it enough time to build and you don't like it and you think sellers are building more than the buyers, you can right there, break even trade, exit the trade, look for another one. Here's the close. So we got that bearish volume closing below that daily point of interest. That's not good. Okay, so you see how that bar now opened, ignited, bearish, and dropping. Okay, so the sellers are trying to break this zone. Okay, will the buyers be there to hold it up, or will it break down for that new lower low? Okay, so buyers are still there. Is this going to create our double bottom, what I was talking about? Okay, so we had the one leg come down. Like I said, the neckline is somewhere right around here, right? It's 50% right there. And coming back down. So this is now technically the second bottom. Are we going to get a good bullish push coming up on the second bottom? Maybe there's the double, there's the W, okay? One bottom, neckline, second bottom. Can we come back up and then maybe have a W breakout? Or it's just going to be a lower high and we're going to continue advancing down. And this is going to be a failed buying attempt. And guys, I'm going to stick with this just for a couple more minutes and then we got to move on to US 30 and NASDAQ because we're going to have the Wall Street market open, okay? So regardless, I told you guys where my stop loss is. Let's see if we can get some volume moving up now on this second leg, maybe closing above. Here's body, body. Like I always look at this area. Can we, before we go all the way up bullish up here and we, you know, we're counting our chickens before they hatch, we gotta just get above right here. Right there, where our highest point was just on this candle, where we came up. There's a body and a body. So we still have a lower high, lower high, lower high, lower high. So you can see it's pushing down from there.
Appliances up here.
Okay. Can you tell them just to put them behind the couch?
Behind the couch?
Yeah.
Okay.
The appliances are here, guys. I just told my wife to tell them to put them behind the couch, but I might have to go up there and just show them exactly where to put them. Okay, so we got a good return, double bottom, but let's not get too excited. We got to close with volume above here, maybe create new higher highs above here, because what comes up could easily go right back down. There's still 2.5 minutes to go on this, okay? Okay, so we're going to close in 2 minutes. Again, can we get some volume closing above these bodies over here? Okay, because then we can build off of that. Then we can flip this resistance and turn it into minor support going into Wall Street at 9:30. Okay, I know we're looking at gold, guys. We're going to have to transition over here to US 30 and NASDAQ, but they're kind of barcoding too. We're going to wait. I'm going to wait anyways for the first 5-minute candle to close regardless on US 30 and NASDAQ. So, you know, if we're watching gold as well, keep an eye on this, guys, please, okay? Because it could get very volatile when the market opens. Okay, so we got rejected. Again, at that 290 EMA, rejecting us.
In or out of the packages there?
In the packages. Leave them in the packages behind the couch.
Okay.
Hopefully this trade can pay for my appliances. Okay, so here, 30 more seconds. Who's going to close? Can the buyers close it strong? Maybe we'll get a nice breakout with that momentum, or sellers are going to come in and slam it back down, okay? So far, we got good bullish volume. It's our second leg. Second leg traditionally has more volume than the first leg. I always say that. Here Here we're coming up, we're breaking out. There we go, okay? So that's about 20 pips now, right up to there. We're right at 50% of that candle. We've created a new higher high. Now we just got to follow the volume. If you want to reduce your risk now, you're welcome to, while you're up about 20 pips, or we wait for continuation, okay? If we can get the body close above, there's the close, okay? So we got a close, no wick. We got a nice retest. Can we just continue to break out of here? Here we go. We got a no wick. Perfect push. Can we just continue to break and fill that wick right there? There we go. 25 pips. Okay. So you can start to reduce your risk. I'm going to start to reduce risk now. It was open 50 pip stop loss, but now you see I'm coming right now. I've reduced it down to just below the green zone while I'm up 30 pips. Okay. If we're going to continue with this candle, if it closes above, you're going to flip this zone inverted green and stretch it into the future. Okay, so we're at 35 pips now. If we get all the way back up to that zone and we fill that imbalance, we're looking about 45 to 50 pips, guys. So there we go on gold. Okay, so now we can go to break even. We didn't realize any stop loss. Okay, our green zone protected us here. Second bottom, traditionally the bigger bottom. And let's grab some money. I'm going to close out 80%. Okay, I'm closing out 80%, leaving the rest break even. I got to go see what's going on with these appliances. I hear them banging them upstairs. So guys, do you guys want it on gold or US 30 and NASDAQ? I will be back in 2 seconds. Okay, I apologize that this shit happened right before Wall Street market open, but I closed out 80% right there, and I got the rest running at break even. So hit the likes on YouTube on the gold trade. Hopefully I broke that down perfectly for you guys. I hope I did. I'll recap it, but hopefully I broke that down. We'll put it now on US 30. You guys watch US 30 and NASDAQ. I'll be back in 2 seconds, guys. 1 second. Okay, guys, we're back. Hopefully we made some pips on gold. The furniture delivery guys are like, damn, you got nice hair. And I showed them I'm in a buy on gold and they want to learn how to trade right now. So they might come down here during the call after they're done their delivery and we can teach them some price action. So we're back. Okay, but let's worry. Okay, hopefully you guys can manage the trade on gold. Okay, should be up about 45-50 pips. Again, just follow it, guys. If this body closes above, you're going to go red to green for any pullbacks on that. Stretch it into the future. If we can close above there, there's that, you know, that trend line that we were coming down, so it could pull back in. Maybe figure out where 50% of this bullish candle is when it finally closes, maybe for a quick little pullback and continue driving. If we can close above here, maybe we're gonna have a bullish breakout continuing. Okay, so I got 20% still running at break even. I'm invested in that trade, but congrats to you guys, you know, that learned about that and got some pips. let's follow this now, okay? So US 30, we're breaking above. Remember, this red zone was the 4-hour point of control coming from Europe, and this is our white line. So we did naturally break out of here. If it does close above, we're gonna flip the red zone green, and we're gonna continue doing what we do. NASDAQ is breaking out almost to the highest point of the day and got rejected. So here's the close. Okay, so it did just technically close above there, just by a tiny bit. So I'm just going red to green. I'm still not convinced. It didn't close strong up there. So let's see maybe if it can continue come in. Remember, the size of the wick matters. Okay, so that's a big wick, but Wall Street can fill these wicks no problem. Okay, so it's got to come all the way back up there, fill that wick, and then create that new high right up to there. So it can. Remember, Wall Street has a lot of volume, more volume. Okay. Sorry guys, I'm just getting resituated here. Just want to make sure that we didn't have any news that I missed. 9:30, no news coming into 10 a.m. Okay, so there was no news. Gold, guys. Oh, an ignited open. Okay, look, gold. It came down, ignited open, continuing to break and push. Okay, so guys, that's about 50 pips. But continuing, if it closes above this red zone, we can flip green momentarily. Okay, so beautiful, guys. That double bottom buy, man. Oh shit, guys, gold is looking good. Okay, yeah, so I'm waiting on this. Guys, that's what I'm saying. Sometimes it's a higher wick. You got to be careful. Now they're bringing it right back down. So I'm gonna wait for this body to close. Okay, because we're playing like yesterday. You know how choppy Wall Street was yesterday, where it's bullish, bearish, bullish, bearish. Again, it's doing the same shit. So that's on US 30. NASDAQ is continuing to build and drive, but I'll continue to follow these. Guys, this is not good trading volume. It's still choppy. Let's let it do its thing, okay? Gold. Wow. Ooh, shit. Now we're right back in that consolidated zone. You guys see how it can return. I wanted to buy with that daily candle. There was a beautiful sell opportunity there, but we never caught it, okay? I told you I was waiting to sell the pullback. It never came, but it came back deeper down into a nice buying area. So I switched my focus to buy with the higher time frame, right? Those equal bottom lows. That block, I showed you guys, those wick. There's that volume that was untapped in there. Guys, beautiful. I hope I can break that down by the end of the call for you guys again, but I don't like the way how NASDAQ and US 30 are trading right now. So we got to continue to be patient. Okay, and then if you get that closing volume again, you're going to flip that red zone green. Wow, okay. Not bad trade on gold, guys. How much drawdown did we encounter? You know, just a little bit, those wicks, not much. For that return, you know, so it's not a 1-to-1 on your money. Now it's risk 10 pips to make 70, not bad. Okay, unrealized risk. Remember the gentleman told me, Ron, you have a 50 pip stop loss? Yeah, but I place it down there, but then as we get the trade going in, then we start reducing it, and then you eventually get it down to 0. Okay. Okay, so US 30 came all the way back down, okay? Point of interest where the body opened at 9:30. We're still above the yellow daily point of interest. Buyers are asking to trade back above here, but it's still closing here. Look at NASDAQ, came all the way up, okay? So if you're in buys and you didn't do anything, unfortunately it comes all the way back down, okay? So this could be a double top, a bigger one. Look, there's the one top yellow line, there's the neckline, yellow to yellow. We came, we broke through it, they grabbed the pending orders, they hit the liquidity, and now they're coming right back down. So this could be a big M pattern. Look, okay, if Donald Trump, that news with everything with the Fed, Lisa Cook and all of that, if the market doesn't like that, could be a sell-off, okay? You got a big bearish engulfing candle coming down now that's going to close in 1 minute, okay? So when we're looking at double tops, that's what I mean, guys. Like right up here, yellow line. That's why I use these lines for where I trade off of, where I watch what happens up there. There's one top, there's the second top. They grabbed the liquidity. They did not take out the highest point of the day. It is a lower high. But when they did come down, now buyers are bringing it right back up. So we could build. But again, it's okay to be on the sidelines. And it's okay to be waiting. Lee, 50 pip stop loss is not big for gold? No, it's not. You know, it's not big for me, but for some traders, it's big. But sometimes you got to open up your stop loss a little bit, decrease your sizing to make up for that. Nice one, boom. One trade, gold met, 2% runner left, job done. Good one. Enjoy the rest of your day, boom. Let's make this a habit, bro. Every single day we're done. Daily goals by 10 a.m. Eastern, we're done. Good for you, boss. Okay, so look, guys, US 30, the sellers closed it below that green zone. So I'm just playing the game, changing the color to see which zone will hold up. So now sellers are proving to me they're stronger. They closed it below there. So we could technically push back down unless the buyers can come back and close it above here. Sellers, came all the way down. Buyers brought it right back up. So I'm not convinced on this volume, guys. It's still, kind of choppy. Barcoding, bullish, bearish, bullish. We got to give it a little more time to develop. Gold, okay, so gold broke out, closed inside the zone. Did not close above it technically. So I cannot make it green right now because I didn't get any volume closing above. We're trading right at it. Can we continue to build? Yes. What's up?
They want to take the fridge out of the package because it's not fitting the door.
Okay, guys, I'll be right back. I'll be right back. Guys, I apologize. I can stay maybe like 5 more minutes because I got to help these guys. They're having difficulty getting the fridge through my door. I have to take the door off. It's a big fridge. So, guys, Dave will be coming in post New York. So you guys will have a session there. But I'll stick with you as much as I can, okay? So you see we're getting resistance coming back down on gold. Still, if this bar closes above, flip it, but it could reverse, guys. So, lock in a little bit of profit, trail it behind if you guys can. Don't give too much money away. We're still building. Look at US 30, okay? Still building. 2 more minutes. We might get that nice bullish closer above here. So we were barcoding, building. We could continue to break out to the upside. Maybe test today's daily high. Same with NASDAQ. Continuing to build. We're holding good support. Okay, guys, NBA Online Hub, thank you for subscribing to the channel. We do appreciate you, bro. Guys, I'm sorry. I expected these guys to come around 10 to 11, not this early, not during Wall Street. Who does that? How do you not know that we're trading? I gotta teach these guys how to trade, never mind bringing in appliances. Guys, thank you guys so much for all the viewers again today. We appreciate it. Okay, nice, big, strong US 30 candle. Guys, don't forget tomorrow market hour close. NVIDIA has earnings Wednesday after hours. Okay, don't forget about that. Okay, so we came back up. Again, did it hit the daily high? The purple line just missed it and big rejection. Okay, so there's still a lot of selling pressure. But again, it's barcoding. Bullish, bearish, bullish. Guys, I don't like this type of volume sometimes like this. So it might be good to wait till 10 a.m. You know, we had this yesterday where the market was very, very choppy. And then after 10, 10:30, 11, it started to open up and it looked much better trading. We might get that again today. There's no news today, so the market is really choppy right now. Okay, but if this US 30 closes back above, I'm going to flip the red to green. I'm not changing the size of the zone. I'm just changing the color of it. There's the close. Okay, so I flipped it back down. So if it pulls back, maybe I can buy back in here. Okay, again, you got to wait patiently. Is it going to come back in this candle? Might come back in 5, 10, 15 minutes later. There might be an opportunity. But again, you got to watch. You got to be careful because sometimes with the Wall Street volume, it will break right through there and come back down. A better opportunity is to buy the yellow line. But that's just testing the zone right there. Okay. And gold, look, gold did close above, so go red to green. And you can see that it caught a wick on a retest. All it has to do again is flip and drive, okay? This could turn to the next upper red box and turn into a 75 pip trade. It's retesting now. We broke through that trend line. We got volume above. So we could technically continue to drive on gold. Hopefully you guys caught some pips on gold. Yeah, I don't want to force anything on NASDAQ or US 30. I do not like the way I was trading, guys. I'm sorry. I love to scalp like the best of them, but this type of stuff, I don't want to force anything. It's bullish, it's bearish. It's bullish, it's bearish. Okay? Again, this is exactly how it was trading yesterday. Go back and review yesterday's 9:30 to 10 a.m. I guarantee you, like right over here. Let's go. I can show you how choppy it was trading. What was yesterday? Tuesday. Oh, I can't even. Oh, today. Shit. Where is it? Yeah, here it was yesterday. Look at how it was trading yesterday. There's 925, 930, back down, back up, back down. And then see when it started to slowly, look at after 10 a.m. Then it started to break down, okay? So very similar. We might get something like that today, okay? Right now we close back above, retesting back down. Now they're dropping it down. So there's that double top with the liquidity grab. What I would be watching for later this afternoon, guys, right there. If the volume closes below this yellow line, we could have a significant drop today, okay? There's that double top with the liquidity grab. All we need is confirmation for it to close below down in here, and we could start trickling down in here. Same with US 30, guys. I don't know how the market is going to react to this big news. I know someone will say, Ron, this isn't big news. This is actually big news. President Trump claimed to fire Federal Reserve Governor Lisa Cook on last night over allegations of mortgage fraud. He's getting rid of a Fed governor. That is not good for Wall Street, okay? And that's why, guys, you know, we secure money on things like this that happen in the markets. Okay, guys, I got to go see what these guys are doing upstairs. I don't want to leave them alone up there. I'll see you guys tomorrow. Again, same time, 6 a.m. To 10 a.m. tomorrow. And Dave will be coming in post New York, so you guys can have a little bit of a break, and maybe you guys will have really good volume to trade after. So join Dave, give him some love. Everyone on YouTube, thank you guys for liking, subscribing the channel. If you guys can hit the subscribe button before you guys, oh my God, 83,100. Thank you guys so much. That's amazing. We were looking for 83,050 today. We exceeded that. So thank you guys so much. Appreciate this. Hit the W's in the chat. Thank you, Red Clues. Appreciate you guys. Hit the likes, subscribe. Don't miss out on tomorrow. Again, do you guys like how today's session went? Where we started, we did US 30 and NASDAQ, a nice thorough analysis, and then we moved into gold. Do you guys want me to continue that? Do you guys like that? We start at 6 a.m., so we got a lot of time on these calls. So we can do a nice thorough analysis of Dow, nice thorough of NASDAQ. We can even add S&P 500 if you guys want. ES. We can add that in there as well. Gold. And we'll be trading into the news, anything related, but we'll make sure everything is good to go, guys. Oil, we can add oil in. If you guys want to add oil, let's add oil. It's all good. It doesn't matter to me. We're going to learn anyways some new securities, okay? But thank you guys so much. Just please trade smart today. It looks like Wall Street is very erratic, very choppy for US 30. NASDAQ is making a move right now. And gold, guys, you know, what goes up can come down, okay? So that's why I always say lock in some profit. Don't always just get greedy and want more and more and more. Trade to some targets. I traded to my target. When it hit 50 pips, I secured 80%, left 20% running. Okay, that's the way how I trade. It's not, I don't recommend it for everybody, but I like to lock in some profit to pay for the appliances I have upstairs. So thank you guys so much. Make sure to join our free Telegram channel. Everyone on YouTube, it's pinned at the top of the channel. Xavier, I like the rant. You show that you know what you're doing by number of times you show up and we take trades that profit. Thank you, bro. It means a lot to me. Sorry for that rant today, but you had the uncle come out of me and start ranting. So once in a while, you're going to get that rant coming out. But guys, we'll see you guys tomorrow. Thank you guys so much. Thanks for the W in the chat. Thanks for liking, subscribing, everything. Join the team, guys. We got some promos. Visit our website, stocksnipertrading.com. This is a good blog we did last night, the importance of staying emotionally detached in trading. Okay, you see that gold trade I took? I'm not marrying this trade. It was a nice trade, but I'm not going for gold to go to all-time highs today. I got in the trade, I came to my target, made my money, and got out. Okay, I'm not emotionally attached to this trade, okay? Because I know it can come right back down, just like it's doing right now. It's happened to me a million times in the markets, so that's why I don't get emotionally attached to trading. I get in, I look for a good setup, I make my money, I get out, okay? So thank you guys. Have a good day today. Look at, like, NASDAQ is, look at barcoding central, okay? Like, this is as barcoding as it gets. Blue, black, blue, black, blue. You know, it's building on the way up. You know, you could test out some buys or just wait for this volume to settle down. Like, look how erratic NASDAQ is. That big bearish candle that came right back down to this daily yellow line and coming right back up. It's very, very erratic, and just be patient. Use smaller trades if you're looking for buys and sells until you get full confirmations. Okay, it's trading real tough right now. Believe me, I'm a scalper, and this is very difficult to trade this stuff. So wait for 10 a.m. Wait for 10:30. Wait till 11. Join Stock Sniper Trading and join Dave on the Post New Yorks. Okay, but we'll see you guys tomorrow. Thank you guys so much. Have a good day, everyone. Thank you. God bless everyone.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.